much, sir, and I must, you know, congratulate you on the huge job that government is doing. Just the volumes that you are talking about, you know, specifically when it comes to identity and pay validation, especially. I'm sure you know most of us from corporates, we struggle with our identity management and other elements where fortunately all of us are digitally aware. We do understand our you know basic elements to carry out from when it comes to IT. But what Sir was mentioning is a completely different segment where the digital awareness, digital penetration is fairly low, and still making this entire ecosystem work is amazing. Thanks for that perspective, sir. Vishal, I know you know you briefly touched on cross-border transactions. Just wanted to understand how does Swift look at securing that cross-border transaction, as well as I know the entire discussion around the framework of CSCF has been going through. But from you know the industry ecosystem, are there any refinements, any changes which are near the horizon which we need to be aware of?
Sure, Vidur. I think I'll divide the response in two parts, right? One is the Swift connectivity itself, and second is the message that flows from the Swift connectivity, the SwiftNet, right? So first, touching upon the connectivity, that's where I'll talk about the customer security control framework, right? So that's something which was set out in 2016. And from them until now, there have been progressive changes to how we expect the banks or the financial institutions to self-monitor, right? Essentially, it's a self-attestation framework for the banks to comply better, to be sure that incidents don't happen. Now, in terms of where we are as a region, I think a pat on the back, because we've moved from 95% plus to almost 99% plus in terms of complying with doing this self-attestation, which is good. But still, as a region, we continue to be vulnerable. So we need to still look at the framework holistically and do those changes. Some of the recent changes are that this framework has mandated business controls for banks, which means that they need to, at a business level, define what are the operating hours, what is the size of transaction or a currency or the location that it is intended to, based on which you would want to do some escalations around these transactions, right? And look into the future. The way Swift connectivity is going to change is that we are moving towards a more cloud and API-based framework, which means that the footprint may reduce. The banks will have an option to reduce the Swift footprint and go for APIs, for example, which means that these controls will also be leaner. And it just means that the banks will have to then look at their own back office applications more to ensure those controls are still happening. Finally, touching upon messaging, the one big change is ISO 20022 is coming. We are moving from empty formats to XML-based format. In layman term, all it means is that your messages will start looking 7 or 8x bigger, with a far greater flexibility to add more detail. Adding more detail, adding rich data means that banks and regulators alike will have more control on how they prevent untoward incidents, right? But this is still evolving, long way to go. Banks will take a while to adopt this. First, expect a like for like before you start seeing banks leveraging this rich data to do anything differently. What this can also pivot into is that Swift is making a transaction management platform which helps interoperability between banks who are ready and banks who are not so ready. This same platform can be used to host some value-added services, which will be common services for the banks to prevent fraud, which means that even if there is a smaller bank who cannot afford a solution, suddenly there could be a solution which is on a common worldwide platform which smaller banks can leverage to get a very similar quality of fraud prevention, right? So I think that's on the horizon.
Thanks for sharing that Vishal perspective on the evolving elements. And I'm sure, of course, as the volume and as the adoption goes up, we will see those compliances also evolve. If I move on to Vikas, and I know you touched on the collective responsibility, and sorry to pick you on that, but so if I had to ask you as an OEM or as a service provider, some of us are in that domain, in that industry, how can we contribute in this collective responsibility of, driving the digital security of the entire payment industry?
So great point, Vidur, you touched. See, understand the broader perspective here. Let's try to understand the broader perspective. Cyber security is no more a standalone technology. Now it is a foundational set of spanning across technology, people, and processes. We as a OEM community generally serve to the technology piece, right? And that's predominantly, if you say, it is just a 30% of the overall things. Rest goes to people and processes of this. How OEM can contribute into it is one aspect which is often overlooked is our cyber awareness. That is, most of us get into this. And then second aspect, other than the cyber awareness is, we are having a shortage of cyber security skills. And that's not just a shortage, it's a huge deficit, right? The way we are doing a massive digitalization in the country, we are seeing shortage of cyber security skill in every domain. It's not just fintech. Wherever you go, you will find a shortage. That skill development in terms of the cyber security, where OEMs can partner with various government institutions at every level, including ITIs. That's an area where I personally feel that can make a lot of difference in terms of cyber awareness. Second piece, when we talk about technology, and as I said about certain recommendations during my presentation, we can play a vital role in strengthening the overall framework. Right now, most of the OEM community talks about product. That yes, I do have such and such product. However, the need of an hour, a need of fintech customers and every customer is to adopt a platform-based approach that covers all your threat vectors, and it talks about how mature your cyber security overall posture is, whether you are on a cloud or on-prem. What is your cyber security posture? So these are few areas where OEMs can contribute a lot while we are doing our bit on point number 1 and 2, the cyber awareness and skill set. But the third, which gives us a revenue, that's an area where we need to work more cohesively with the industry, with the customers, with all the private players and government as well, to strengthen the overall cyber security posture for all organizations by putting various solutions in that infrastructure, security solutions, of course. So that's what an OEM can play an important, vital role in the overall cyber security posture.
Thanks, Vikas, for those elements. And I do see most of us, I'm just saying, myself being from a services industry, that playing that role which you said on 1 and 2 elements as well, where we are contributing back. Of course, yes, that does help us in driving the third on the revenue as well. If I may, take help from Vipin, specifically, if I, this entire discussion and debate going on around on the tokenization, and now we have a deadline also coming in next few weeks element. So one is, what's the benefit that you believe that as a government, as an industry, we can drive from this, once it happens? And second, are there any specific changes, technological changes, which are mandated or are required to be done to adopt to this?
Thanks, Vidur. That's a great question. I don't know how many of you understand the complex world of tokenization. To demystify, and if most of you are from Delhi and you go and buy milk on the mother dairy outlets, you would be using tokens which the mother dairy has provided to you in place of cash. So just remember that token in the back of the mind as we discuss what tokenization is. So it's a great initiative which RBI has been piloting the industry through. Requires a lot of effort on part of all of us to migrate. And Vidur asked me what are the benefits. I'll give you a couple of scenarios, and we would have experienced those real life scenarios. So on a day when you are driving from work, say Gurgaon to Noida, and there is a call from your wife and immediate payment has to be made, and you are on a website or a mobile trying to drive, trying to look at the 16-digit card numbers which you are trying to enter, and there is hypothetically man from the power company counting minutes when he can cut off your power connection. So imagine a scenario where you don't have to key in those 16 digits. That's one scenario. The other scenario is, and we keep hearing a lot in social media now, so-and-so merchant got hacked. And the first thought that comes to my mind is, was my card part of the hack that happened? And imagine the plight of the merchant, he got hacked. So from a customer perspective, you are treating him as a criminal, whereas actually he's a victim. In spite of all the best measures he took, all the controls he put, and Sir also spoke about the various challenges, various protocols, and fraudsters attempting to do more, the merchant is a victim. Is there a solve for it? Yes, tokenization attempts to solve for it. So what RBI, by introducing tokenization, is trying to do is solve for 3-4 things. One is the consumer experience doesn't get compromised. So once you have stored your or entered the 16-digit number, you can use, you don't have to repeat or you don't have to enter it every time. That's one. Secondly, when I know that for that card number a token has been created, I don't need to bother when I see news like the merchant has been compromised, because I know my card there is saved as token. And I spoke about one of the Visa's 4 pillars of security on devaluing data. So even if the token is stolen, the merchant cannot, or the fraudster cannot do anything with it. So in tokenization, what we are doing is we are replacing certain, what we call sensitive information with a value which is mathematically generated. And you, from that value, you can't create back a card number or the other sensitive information. So from a merchant perspective also, that's something which is beneficial to him. Third, what happens when going back to my earlier example, if you try entering your card number 2-3 times and it doesn't work out, you just abandon the card. You don't do that transaction. So it is also helping merchants from the perspective of being able to, customer being able to complete the transaction, that the card abandonment doesn't happen. So these are some of the benefits which are there. The implementation is ongoing. And as I mentioned, the regulator has been guiding the industry on how to roll it out. And Vidur mentioned about a deadline which is there. And we have seen major merchants have already started migrating. And there are our partners, and Doc is there from our government engagement team, and Sailesh is there from our acceptance team, who is helping our partners enable merchant. Sailesh, you want to add anything more to what I said? Nothing, thank you. Different countries implemented differently. To answer Vidur's second part on what are the technology changes required. So our teams are guiding our partners, our merchants on the enablement to be done. India has adopted the road of mandate. And we hope that the merchant community is able to migrate fairly quickly. And RBI is keeping an open dialogue and helping the industry adopt this important initiative so that the merchant and the customers feel safe about their transactions going forward. Thanks, Vidur.
Thanks, Vipin. And I like that part where you touch specifically from the point of view of a merchant when an unfortunate incident happens, rather than all of us blaming as an end customer, we need to realize. Moving on to you, Joy, from specifically from a MasterCard perspective. We all talked about the immense effort as industry, and respective, each player has been putting around how to secure themselves from cyber security, cyber attacks. Just wanted to hear your experience when you wear that MasterCard hat, as well as any significant changes or the thrust that you saw specifically in the last 2 years, this pre and post-COVID era nowadays that we call it as.
Thanks, Vidur. So that's an interesting question, I would say. So the pandemic, has definitely created enormous challenges, for all of us. And with the new norms of the hybrid working environment, moving from the physical to the digital infrastructure, has created, humongous operational, systemic, and reputational risk, right, across for organizations, entities, and the financial institutions. And I think so the BFI sector has done pioneering and great technology solutions that they've introduced as payment form factors in the form of tokenization that Vipin spoke about, which is the tap and go technology. The QR technology, which is inexpensive and can be used across digital challenge. So I think so these are some of the key initiatives that have really helped go through us and drive through the pandemic. The other, I think so, the technology that has really helped us is these three form factors have definitely added multi-layers of authentication in the industry. And talking about MasterCard, what we have done is we have adopted a connected intelligence approach, which is that we are monitoring the entire journey of a user from the time he starts his financial journey and when he's doing the payment and post-payment experience. What we are doing is at MasterCard, we leverage various network capabilities in the space of AI, ML, behavioral biometrics to understand in terms of whether it's the actual user or the fraudulent user doing the transaction. And then the post-transaction experience, when he's completed that transaction, if the consumer still has any challenges, how do we help him mitigate those challenges? And all of this is happening at a very seamless manner without friction for the consumer on the front end. And I would also like to applaud, right, as most of us have spoken here, the government of India has created enormous awareness and cybersecurity initiatives, right? The DigiSathi initiative that they have done, the reporting of the cybersecurity incidents. I think so all of this has played a great role, right, in building up the trust and transparency in the cybersecurity environment. And I think so, as I said earlier, the collaboration from each one of us, right, each industry player will definitely go a long way in building this trust, consumer trust and transparency in the entire ecosystem. Thank you.
Thanks, Joy, for touching on the trust and transparency. Just looking at the time, perhaps let me invite if we can pick up one or two questions from audience. Please, maybe you can raise your hands. Let us know your name and the organization you represent. In case your question is directed towards a specific panelist, please do let us know. Otherwise, between us, we'll try to pick it up.
Good afternoon, sir. So question is for Vishal, sir. You said something that you are getting an alternative prepared for small banks or banks who are not already part of SWIFT system. So can you throw some light on it, what you are going to work in it? And another thing is you said that XML, you are shifting MT to XML. Earlier, previously, SWIFT had changed just two codes, MT799, and they were renamed. It took 2 years to reach the bottom of the pyramid of SWIFT बैंक चैनल को कि वो कोड रीनेम हो गया है या फिर कोड चेंज हो गया. सो इफ़ यू आर गोइंग टू चेंज एवरीथिंग रीसेट टू न्यू लैंग्वेज, तो हाउ व्हाट यू थिंक एज अ चैलेंजेस? विल इट बी अगेन जीरो से सबको सीखना पड़ेगा, समझना पड़ेगा? इट इज़ ऑलरेडी अ कॉम्प्लेक्स कैलकुलेशन, यू नो दैट बैंकर्स को जो समझ में आ रहा है, बट नाउ अगेन दे विल हैव टू रीलर्न इट पोस्ट चेंजेस. सो देर आर टू क्वेश्चंस. फर्स्ट इज व्हाट इज़ फॉर बैंक्स? You said that you are getting some solution that smaller banks can be part of SWIFT system.
Right. I get the question. I'll answer both. So let me take the first question first. So essentially what I was talking about is low footprint SWIFT connectivity. If you look at what it takes for a new entity to come on board to SWIFT today, for various historic reasons and security reasons, there is a fairly heavy set of infrastructure which is required. There are a couple of layers of software required. There are some specific hardware required to do that, right? And we want to change that. Financial services has now found its comfort with cloud. So we've introduced that as well. You will very soon be able to host your Swift infrastructure on cloud. You don't have to have the servers on-prem. That's one. Second is, going forward, more and more services will be available on APIs, which means that you will again not need multiple layers of software that you required earlier to make a message. Banks can take onus of generating those messages at their backend and then just send and receive over API. What it means in layman terms is Swift footprint can potentially go down. So that is what I meant. It could be used by corporates, it could be used by banks alike in the future. It could specifically for neo-banks who are new to the game, they might be early adopters of this, right? Potentially. See, both options are available.
I'm so sorry, Vishal, but allow me to take the moderator discretion from a time perspective. Let's connect offline. And
I'll answer this offline.
Yeah, sorry, while I did say 2 questions, but just being a little wary of the time, not running away. I think most of us are going to be around. Please feel free to catch up with us. I just wanted to, pass on a sincere thanks to SOCHAM, for this amazing event. Thank you guys for being a wonderful audience and wonderful having you as co-panelists, all the esteemed members. Thank you very much.
Thank you so much for finishing in time. So next session is quite interesting one. So we have Director and Head of Partnership India from Meta, earlier Facebook, Shri Manish Chopra. So ladies and gentlemen, please put your hands together as we welcome Shri Manish Chopra, Director and Head of Partnerships India, Meta. Meta's vision for India.
Thank you everyone and good afternoon. It does seem like a really different world, right? Being back in a conference room with so many people in a real conference. I know we've done so many virtual conferences over the last 2.5 years. This is surreal, but I'm delighted to be here. Thank you so much for this opportunity. I work at Meta. I've been there with Meta for the last 4 years. I look after our business, which is the Meta Business Group, across multiple areas. I lead our work that we do on our content business, so we work very closely with major content publishers, all the big TV channels, all the big cricket and other sports channels that push out a lot of content. I work very closely with creators and influencers to grow Instagram Reels. Apart from that, we work very closely with large telco partners who grow, the digital inclusion by having more and more smartphones getting connected. As part of that, we also work very closely with them to expand commerce and payment across the country. So different verticals that my team and I focus on. Today, we're actually very happy to be here. I think leaders here represent a full spectrum, right, across policy, across media, academia, and definitely from the industry. Meta's vision really has been to be a core part of the fintech and the digital ecosystem in India, and in our own way, help fuel this ecosystem. We are very clear that India is where global benchmarks are being created. very clearly with the India stack, we've seen that we've built one of the most robust and comprehensive digital public good systems with Aadhaar. 99% of all of India is connected through Aadhaar to important government digital services. UPI, another great example, all of you know that very well. But what we believe is that UPI represents the fundamental foundation for a brand like ours, right, payment on WhatsApp, to be able to really go into areas where the digital inclusion has not yet happened. And we believe that we can play a significant role there. So our fundamental belief, right, is around the fact that WhatsApp's reach, ease of use, and reliability is something that we think can help take UPI across geographies in India and across the world. And I think what's more important is open up to different strata as well as different socioeconomic parts of the country. Our vision for WhatsApp is actually to onboard the next 500 million people who are not part of today's digital ecosystem. Last year, we announced a pilot in Karnataka and Maharashtra where we were working with 500 villages at the grassroots level and helping them get to a cash-free kind of an economy there. As you can imagine, really at a village level, this was a challenge. And we have rolled up our sleeve and started to work there to understand what are how to make payment on WhatsApp more simpler. How do we create the systems that make people feel comfortable to do their first ever digital payment transaction on WhatsApp, right? And use their smartphones. We've also been working with small finance banks like AU and Equitas, right, that are focused on rural segments and micro industries. This is all work in progress. We know a lot of people use WhatsApp multiple times every day, but now we've started to see some interesting use cases happen. People have started to buy, health insurance from SBI through WhatsApp. People have started to get their micro pensions through the Indian National Pension Scheme on WhatsApp. To reinforce, we believe that taking that access to the next set of 500 million Indians will drive the right kind of stable economic empowerment. And that is true financial inclusion. And towards that mission, we know it's a long-term mission, and we are really committed to it with a long-term play. India in the last few years, especially the last 2 years with the pandemic, has seen some dramatic transformations. 700 million odd people today are connected on the internet. Not very many of them are comfortable doing a lot of things on their smartphones as yet. So digital literacy is a significant problem. Reliability is a problem. And more important, right, just the credibility and confidence is a problem. And I think our apps, Meta's apps like Facebook, Instagram, and WhatsApp have turned out to be very clearly the first app that somebody who gets a smartphone is using. And their ability to be able to interact with what we have on our apps, as well as then interact with services that are offered or through WhatsApp, is their digital gateway, if you might as well think about it. So we have built, therefore, an India-first strategy. In the last 2.5 years, we've invested in doing a few things, right? I'll talk a little bit about how we work with SMBs. But before I go there, the startup ecosystem in India is something that's been an area where we believe that homegrown startups are the place where a lot of interesting changes will happen, a lot of interesting digital transformation journeys will be created. We invested in 2 startups, not in the payment space. We invested in Meesho and Unacademy. We've done follow-on investments to the journey there. We believe very strongly that that kind of an approach will help us really contribute. We also invested, as you might know, in Geo, in Geo platforms to help bring commerce on WhatsApp and the ability to be able to transact very simply through WhatsApp, as simple as sending a message. And that's something very exciting too. Now, on the SMB piece, right, the way we've been working with SMBs is a couple of things. See, what happened in the pandemic is there was an acceleration by force, I would say mostly, for really small businesses to get online. And really small businesses to set up websites and payment systems and get online was hard. Our focus during that time period was, let's help enable them. We built the WhatsApp business app. And that app has been built first in India and is being built with the Indian SMBs or merchants in mind. We created several features that make it simpler for small businesses to be able to receive orders, to be able to figure out and manage requests, right? Different kinds of requests, size related, different flavors if they are, whatever they are selling, right? And then track order inquiries. That entire innovation that helped us is something that was brought to fore, especially during the pandemic when people started using it. Let me give you 2 examples of how we felt that this was scaled up in a dramatic way. Seva is an organization which helps women entrepreneurs. We worked with these women entrepreneurs and helped women entrepreneurs who were literally stuck with the supply chains completely collapsed in Kashmir be able to sell through WhatsApp. Seva created this method that they could have an alternate supply chain and be able to sell apples and cherries. One big example is what they were able to do in Gujarat, right? And that was captured in a beautiful case study also. Another organization is Mandeshi. And again, Mandeshi is a women empowerment NGO. But during those times when everything was shut down, lots and lots of factories didn't have people who were just, these are small tailoring units and small fashion apparel factories, right? They had excess fabric, and the demand, the need at that time was for masks. So Mandeshi organized this by creating small videos and sending it out and setting up small groups on WhatsApp to be able to get more than 10 million masks made, which was sold then in the cities, and the money was sent back to these rural women. Great examples as such. The other way of enabling SMBs that we've been working on is to get them 2 kinds of capabilities. First is working capital finance, right? SMBs who advertise on Facebook, right, and have been part of our Facebook ecosystem. We enabled an SMB loans initiative, and this was a small business loans initiative through an independent loan agency, and they were able to get quick access to these. Women got a differentiated discounted rate too, and this became Meta's first product, right, that was launched globally to enable SMB loans. We're going to expand that across the country. We also set up business skilling programs, right, teaching SMBs on how to set up advertising, how to reach new customers, how to create the link to be able to get new orders. We worked with small companies that are funded companies, so VC-backed companies, more than 500 such small invested companies. We worked with them to get them the right kind of skills so that they're able to find customers and ramp up their businesses quickly. So these are the areas where we've been fundamentally focused on. Some programs like what we've been doing we did with FICCI. We have done the 50%, the greater 50% program. Basically, is focused on getting 5 lakh women entrepreneurs owning SMB businesses to be able to use various tools and solutions that we have, right, and get ramped up on being able to scale their businesses. We also we have a global program called She Means Business. 1.5 million women through that program, right, have benefited. In India, we run that program through the customer service centers, the CSCs, the common service centers. We run that through the Ministry of Tribal Affairs and be able to get the ability to have both digital and financial inclusion at scale happening. Last year we launched, inaugurated an office, our first large office in Gurgaon. And as part of that office, we reinforced our commitment to, again, focus on SMBs and on creators. And we said we are going to, over the next 3 years, train and enable 1 crore SMBs through that center and 2.5 lakh creators, right, to be able to create awesome content. Now, how do we believe WhatsApp can play an incredible role in the future? See, today, there are every week 1 billion people message a business on WhatsApp. I'm not talking about general WhatsApp transactions, right? I'm talking about 1 billion people message us, right? Meta products, WhatsApp, Instagram, and Messenger, right? And they interact with businesses there. This is, we believe, a high quality interaction that's happening, right? A valuable interaction for the businesses. And our goal is to be able to enable businesses to be able to find new customers through this. So you'll see a lot of new companies, small companies, put out small ad units, right, where they will say click to message. And that simple click to message will take you into a messaging thread, either on WhatsApp or on Instagram, depending on what the brand wants to do, where you can start having an interaction with a chatbot initially or with the business themselves, and be able to interact and get your either a service resolution done or order a product, get a service. Fundamentally different than where we are today. Today where we are, right, is most of the times you are stuck in a loop of trying to find somebody who can answer your questions. So we believe messaging-based commerce is something that will take off. So to be able to enable that, we've launched recently a free hosting service, right, wherein our cloud-based API for the WhatsApp business platform will be available to all the small businesses. Large businesses use what is WhatsApp API, which is enabling large size customers. You would be getting messages from banks and Tata Sky and airlines and different large businesses. They need the ability to have custom solutions. Small businesses need simple solutions, and so we've created both these products, right, that can work. One example of how the large-scale product is being used is last year the biggest problem in the last 2 years actually was getting authentic information in the pandemic times on the right kind of either medical areas or medical issues, or just the right kind of information about how to find hospitals, how to find the right information. So we worked with the MyGov Corona Help Desk. Now, that's not the key imperative, but today we know that 80 million people are using that Corona Help Desk, the chatbot that is there. 33 million people have downloaded their vaccine certificate. I'm not sure if you've ever tried it, but instead of trying to look for your vaccine certificate on your phone somewhere, just send a message to this chatbot, and within seconds, you will get your latest vaccine certificate. You can also get a lot of other things, your driver license, your Aadhaar card, your PAN card, everything is available through this chatbot, right, where you can download. We believe these are the kind of services that help position Meta to create long-term value and fundamentally towards our mission of having digital inclusion and thereby having financial inclusion at scale. Our mission fundamentally is there are 60 million small businesses in India. How many of them feel that they are in a situation enabled to be able to grow their business and be able to go towards and actually grab this opportunity that we talk about of being Digital India? So with that, let me end. I'd love to take a few questions if there are a few minutes. Yeah. Cool. Thank you.
So our next speaker is Shri Ronak Maheshwari, ED Extreme Internet Exchange. Please welcome him with big round of applause.
So before starting, there is a commonality between me and you guys. You don't understand what an internet exchange is, and I don't understand how finance works. So this is, somehow it is not, so they will take about a minute to load the presentation. So yeah, I am here to explain to you how internet exchange can elevate, fintech's customer experience. There is, I have been here since yesterday, and there are two key points that are coming up again and again in every panel or discussion. One is security, and other is customer experience. And internet exchange can help address some concerns of security as well as improving customer experience. Recently, PhonePe became the first digital payments app to partner with an exchange. They are connected to us to connect to their cloud provider so that they... Okay. Were you able to hear, or should I restart? Okay. So PhonePe, why they connected to us? They required secure, stable, and direct connectivity with their cloud provider. I hope everybody here understands how PhonePe operates. Their cloud provider is their proxy, and there is some data exchange between the cloud provider and PhonePe's infra with respect to dynamic data and static data. This is too technical for you guys, I believe that. So if you have any questions regarding this, please meet me later, or you can ask after the presentation. It helped them reduce latency to the cloud provider, which basically increased concurrent transactions. This resulted in faster digital payments for 370 million PhonePe users. So 1 in 4 Indian uses PhonePe. So about 6-7 months ago, if you had used PhonePe, the payment transaction used to take about a second or something like that. Once they connected to us, their latency to the cloud provider reduced, which increased the transaction speed, and then the experience of the end user to make the transaction, became fast, zippy. As I said, I know that you guys do not understand what is an internet exchange point. So this is some background behind it. This is a diagram which shows you how traffic travels. This is your understanding of how traffic travels from network A to network, from one network to another network. This is basically showing that if the traffic is originating from network B or C to each other, it goes via network A. In technical terms, this is called IP transit. That network A is a IP transit provider to both network B and network C. When B and C, they connect to each other directly, this is called peering. This is called one-to-one bilateral peering. So in this case, traffic originating from B to C and from C to B does not need to go via A. This is called peering. So internet exchange is basically an aggregation of many such peerings. So in the previous slide, you saw one example of one-to-one peering. Internet exchange aggregates and converts it into many-to-many peerings. So I have structured this diagram in a way where you can see supply side and demand side. The ISPs and the users are demanding content, while the organizations on the upper side are providing content. This includes CDNs, hosting providers, content providers, fintech, banks, universities. Now these ISPs and also these fintechs and banks can directly exchange traffic with each other including with their cloud providers, without this traffic having to take public internet route. So what Internet Exchange does is it reduces circuit length between online content and services and their users, resulting in faster speeds, lower latency, and it also optimizes your infrastructure costs. This is our current size. We are present in 6 cities in India and about 37 points of presence. 6 cities are Mumbai, Delhi, Hyderabad, Chennai, Kolkata, and Bangalore. There are about 450 plus networks connected to us. This includes all the major cloud and content providers in India and all major wireline broadband providers in India. IXP, as I explained in the previous slide, IXP reduces latency significantly and helps in improving end user experience. So what's there for fintech? I mean, this is the question you'd be asking, what is in it for me? Fintech is able to get secure and stable network infrastructure. Their data to their cloud does not need to travel via public infrastructure. This increases in reduced transaction processing times, and this helps in more concurrent transactions, which eventually results in superior end user experience. So I'm now open to some questions, if you guys have any. This is where we are present. As I said, we are present in 6 cities in India. Any questions? So either you have understood everything or you have understood nothing. Okay guys, thank you. If you have any questions, I'm available around. I have my colleagues here in orange t-shirts. You can see us. Thank you so much.
So our next session is on role of fintech in financial inclusion, India's tax success story. And the moderator is Akshat Pathak, Associate Partner, Microsafe Consulting. Please welcome Shri Akshat Pathak, Associate Partner, Microsafe Consulting. Panelists are Shri Vinay Satya Narayan, Director, Engineering, Perfuse, Shri Riju Datta, Co-founder, Cash-Free Payments, Shri Ram Rastogi, Chairperson, Fintech Association for Consumer Empowerment, FACE, Shri Vijay Makhijani, Head Business Strategy, Rupify, and Shri Rajneesh Arora, Co-founder, Product and Strategy, Spice Money. So this session is on role of fintech in financial inclusion, India's tax success story. And we have some very eminent panelists in this session. We have Shri Akshat Pathak, who is Associate Partner, Microsafe Consulting. He's moderating the session. We have in this session Shri Vinay Satyanarayan, Director, Engineering, Perfuse. We have in this session Shri Riju Datta, Co-founder, Cash-Free Payments. Shri Ram Rastogi, Chairperson, Fintech Association for Consumer Empowerment. Shri Vijay Makhijani, Head Business Strategy, Rupify. and Shri Rajneesh Arora, co-founder, Product and Strategy, Spice Money. We welcome our panelists in this very interesting discussion. Let's welcome them with big round of applause.
Hi. All right, so thank you for the introductions. Good afternoon, everyone. My name is Akshat Pathak. I work with Microsafe Consulting. We are a boutique consulting firm. I am currently handling the payments and distribution space in India and Vietnam. It's my great pleasure and honor to welcome you all to the session today. As the lady mentioned rightly, I mean, India Stack has been important for all of us in different shapes and forms. And through this session, what we want to do is to get a glimpse of how India Stack has been in terms of transforming the different services, which have had an impact on individuals as well as small businesses. So, so I'll set the agenda for the discussion. So for the next 45 minutes, we're going to have at least a couple of rounds of discussion with our panelists. We'll then have a short Q&A session for the audience, and then we'll try to close the session within the specified time limit. My humble request with all the panel members would be to keep their answers short, and so that each of us get a time, and to make this panel discussion meaningful. All right. So before I begin, I mean, I try to set some context. So I've been around in this industry for last 15 odd years, and I've been fortunate to witness a series of step changes that have transformed the financial inclusion space for the country, right? During this transformation, we have been successful in creating a series of digital public goods. Public goods that are curated subsets of technology, which include software, AI models, data, standards, protocols, and content. Now, these public goods have the power to help countries achieve their SDGs by creating impact at scale. And fortunately, India has been quite a few steps ahead when we compare to other markets, especially the LDCs and similar markets. Out of these digital public goods, India stands out. I mean, as a very important enabler of what we see in what is happening in the country in terms of a digital revolution. India Stack continues to be the moniker for open set APIs for digital public goods, which is now unlocking the economic perspective of data, identity, and payments at a scale which targets the entire country. So to summarize, I think India Stack has helped in solving three critical challenges in the financial inclusion space of our country. The first is access. How do we bring 1 billion plus people in the system, in the financial system, right? Second is, once we bring these people in the system, then how do we retain them? How do we engage with them? How do we make them transact within the financial system? And third is something which is very unique to what India has done in terms of data empowerment, by making the people have benefits around their own data without compromising on privacy and other issues, right? So these are the academic aspects of India Stack. I mean, I'll not go into the details of the different layers of India Stack. I think that must have been covered in some of the previous sessions, and almost all of us have used the different layers, either from the consumer side or from the supplier side. So let's try to keep our discussion on how India Stack has helped private innovation in our country around services which focus on payments, authentication, data sharing, and consent-based architecture. So without further ado, I'll now start the panel discussion. So let's hear from Vinay from Perfios. So Vinay, organization Perfios has been using the different layers of India stack. So we would love to hear, Vinay, about the challenges that you have faced so far, how your journey has been, and what is the impact that you have been able to create?
Sure. Thank you. Thanks for the question. It's a good question. So let's start with the origination of the data, or what is the usage of data. Like money, data is useful only when it is exchanged. Now, for a financial inclusion, today fundamental problem that exists is the last mile reach of the financial product. This has been addressed in various committees like UK's in a report, only 10% of MSME have access to formal credit. Yesterday, CEO of BharatPay also mentioned that banks are happy to give 5 lakh loan, but not a 10,000 loan. Now, to provide such kind of an infrastructure for a financial inclusion to the tier 4, tier 5, you need practically access, usage, and protection. Access, it means access for the data, untampered, real-time, machine-readable, where multiple underwriting models can be done specific to a region, specific to a loan product, sachet loans, etc. Usage is on the delivery or the distribution of those products, and the protection largely on the citizen rights or the consumer rights of the data, the protection of the loan in terms of monitoring, etc. So this is where the bulk of the problem of the financial inclusion is trying to being solved. So let's look at one of the cases of how the data reach is being solved through an account aggregator. That's what we typically termed as the UPI for data. Now, before I jump into the problem, a minute on what's happening on the AA. AA or AA or account aggregator went live probably around September last year, and last 3 quarters, we made close to around 1.2 million consents with around 1 million users on it. Last month, we did as an ecosystem around 4 lakh consents, growing month on month 100%. And there are around 40, 45 FIUs and 10, 15 FIPs. And by the end of year, we would be seeing at least 70% of the CASA base being covered, GSTN, EPF, TRAI, and other data sources coming into this ecosystem. Now, what it means is access to data is at low cost, democratized, and completely consented, and symmetric and homogeneous, available to practically anyone leveraging on it. Now, while that is part one of the problem getting solved through an access of the data, the usage is how do you distribute this financial product? While the data, I've got it at a low cost, today banks do not want to spend 100 rupees for a loan of 2,000 rupees, which means practically they're spending a lot on data, proprietary solutions, etc. With the data layer of the India stack, they would be spending a lot less, getting machine-readable, real-time data to build interesting data models, interesting underwriting models, to build sachet loans at a low cost that can be distributed. Then how do you distribute it? So that's where the entire another India stack story comes, called as an OCEN, Open Credit Enablement Network, which brings up a standard set of APIs between the marketplace and the lenders so that the distribution network can scale. For a country like India, where you need tier 3, tier 4, tier 5, a lot of distribution to happen, this is where the fintechs plays a major role in distributing solutions built on the India stack for getting the data at a low cost, building underwriting models, distributing them to the right set of audience, specifically sachet loans for that set of audience. And the same can be leveraged, extended to monitoring the loan also. So with this OCEN, I think a couple of months back, there was a government e-marketplace leveraging on which some of the banks went live. And the power of financial inclusion of this was so high that a purchase order of 600 rupees was financed from a tier 4 city. 2-3 years back, we would be thinking, how do you fund 600 rupees? That happened because of the OCEN rails and the AA rails. OCEN is one of the use cases of the AA, largely on the digital lending. So we have seen purchase orders being financed from 600 rupees to 2 lakhs, 3 lakhs from tier 4, tier 3, tier 2 cities, which is leading to a larger financial inclusion. So fintechs have a significant role to it. We have onboarded around 30 plus financial institutions on the AA ecosystem, on the OKEN systems, to help them quickly come up with these interesting models and go for the underwriting model and distribute it with a various set of audiences.
Thanks, Vinay. I think you're very right when you talk about the low ticket size products. I mean, that has been a challenge. And India Stack has indeed tried to cut down the cost, which in turn has a factored effect on the customer acquisition for many, many players in the market. So, moving on from OKEN to payments. So, payments in India has been a global success story, right? We are now the poster child of digital payments. This started, I think, with IMPS coming into the picture, and with UPI, the entire industry has transformed. UPI is now clocking almost 4 to 5 billion transactions a month, which I think before the pandemic, nobody could even have imagined such a huge number. Right? So, we have Riju from cash-free payments. I think the name says quite a lot about them. I feel that there are many layers of payments that your company is handling currently. So we would love to hear about your perspective, about your journey on how you have made the end customer benefit from these cash-free payments.
Sure, yeah. So I think just a brief introduction about cash-free. So we are a payment processor and we help businesses accept payments online, accept payments in-store, and also make payouts. And today we work with around 100,000 businesses and we process around 20,000 crores in a month. So around 250,000 crores in a year currently. Yeah, I think what we offer to a business is the ability to get started with online payments pretty quickly. So there is speed of onboarding, there is ease of integration, right, and go to market fast with high reliability, right. So if you want to get a working product out, you can do that pretty quickly with us, right. So that's the basic value add, which is why we are able to onboard, businesses, right. Typically, the complexity when someone looks to start accepting payments online, even though QR codes are ubiquitous, is dealing with a large financial institution, navigating multiple payment methods, processes like settlements, refunds, disputes, and chargebacks, fraud mitigation, right? So those are the things that we help a business handle with a simple API-driven integration, right? So that has been like the core value add, right? And also maybe helping them navigate the front end part of it, right? Let's say ensuring conversions on an Android browser or Android app or a mobile browser like Safari and so on, right? So that has been the core value add. The challenge, I think one of the challenges that we faced like in a fintech business, right? Like one of the challenges, so in addition to like a normal software business where you have to build product, acquire users, hire talent and maintain growth rate, I think in fintech and payments in particular, right, I think it's like striving for innovation in a very fast growing and rapidly evolving market, while also being very mindful of the regulatory environment and the risks, right? And this is something, I mean, we are all startups and we are pretty gung-ho about, innovating and, moving fast. But yeah, I mean, like just because every new technology that comes, right, and we had a few discussions previously also, right? So there are loopholes that might open up, right? So it's very important to be mindful of those risks, right, and prevent abuse of the system, right? So those were like some of the learnings that we had, right, over the last few years as an industry player. Right? So that's the sense.
Thanks, Riju. I think it's really important. I think for all the fintechs in this space to be mindful of what you just mentioned, right? So moving on, I mean, we have Vijay from Rupify, and I think India is home to somewhere around 70 million odd MSMEs in the country, which are largely unregistered, right? And like any other organization, they have their own financial needs, right from payments to credit. And Rupify is one such organization who has been helping, working quite actively in the B2B space and working with these MSMEs, offering integrated services. So, Vijay, we would love to hear from you regarding the space that you're currently working, because it's quite different from the individual or the retail side. I mean, MSMEs are quite unique, especially the smaller ones. So, and while learning about your experiences, we would also love to hear about the B2B BNP product that you are currently offering.
Thank you, Vinay. So at Rupify, what we've done is we have started empowering retailers every time they do a transaction, right? So just like you and I use a Lazy Pay or Simple for buy now, pay later, we basically enable businesses or MSMEs every time they make a purchase. And so far in our last 12 months journey, we've empowered 100,000 retailers, right? And we process roughly 25,000 transactions a day, right? And how is that possible, right? So Vinay very rightfully mentioned that the India stack itself was nothing but digital public goods. What it means is government created infrastructure, or the organizations came forward and created infrastructure wherein it was open for everyone. There was no David, there was no Goliath, right? Unlike developed countries where you had people like Apple and Google commanding the payment system, right? Here we have two fintechs talking about the payment system, which was created from scratch, right? So I think that is what India Stack has started doing, saying that if you got it and if you want to innovate it, come and start running faster. In our journey, if you see any financial institution, right? So what are the things that a financial institution does before granting any loan or giving any line of credit? Starts with identity, right? And that is where Aadhaar comes in, right? Then it goes to financial assessment, and that is where Sehmati and NBFC NBFC AA comes in, right? Then it goes to onboarding, wherein we had digital signature infrastructure. Then there is transaction, because we are a company which basically finances only transactions and doesn't give money directly in the hands of the beneficiary, right? So for us, e-invoicing as a platform comes very handy, right? And that basically is a combination of consent and the transaction, right? And after that, once you've given the money, collections, and that is where the entire UPI and Aadhaar Pay starts playing much larger role. What we've so basically what we've really done is we've kind of brought all the elements of the India Stack together, right, and built a business and helped 100,000 SMEs. The cost of acquisition for a startup like us is probably 1/100th of what it was for the large banks or even medium-sized banks before the India Stack. Right? So I think that is what India Stack has done and enabled so many businesses. Only thing I'll want to say is with this kind of infrastructure being around, India will not wait, right? And we are here to grow and go faster. Thank you.
Thanks, Vijay. I think all of us in the room would agree to the fact that these institutions, they need special attention. They have been left out of the financial system for quite some time, and with the right political will and the digital public goods that we have, I think it's the right time to target them. So I think a large part of the discussion so far has been on technology as well as payments, and part of it has been on credit. But I'll share some interesting data with you. I mean, so we're a country of 1.38 billion people, right? And almost 1 billion of us, we fall under the low and middle income category. These are the people who have been reduced to digital payments and even digital credit for the first time in the last 4 to 5 years. And there have been different influences. I mean, pandemic has been a great game changer. But then apart from that, I mean, there have been very few influencers in their lives. A lot of these people, they are currently suffering from what we call a digital divide, right? So while most of us in the room are very conversant with the way of technology has evolved, the way we use it and consume it on a daily basis, there are still large number of people who may have used a smartphone, but primarily for social media, for messaging applications, right? These are the people who are not able to trust themselves to conduct a financial transaction. So what I'm alluding to is a fact that while we see a lot of private sector innovations, a lot of infrastructure being built around, there are still a lot of people who are sort of left behind because of the digital divide. Now there are institutions like Spice Money who have been on the forefront of helping these category of people to first know about what a digital transaction is all about, what are the benefits, and then enable them to move from assisted mode to a self-initiated mode. So I would like to learn further about this space from you, Mr. Rajneesh. So if you could help us with.
Thanks, Akshat. So as Akshat said, we at Spice Money, we are focused on that 1 billion people who live out of semi-urban and rural India. So we have 5,000 blocks and 6 lakh villages in the country. And at Spice Money, we are present in about 210,000 villages and almost all the blocks. We serve about 20 million customers, in excess of 20 million customers who transact on our platform every month. And the way we do it, as Akshat said, we bring together the technology and the community and the trust that the community brings along with it. We put this together and help customers, do financial services and other services on a platform. The way we operate is we have 1 million nano entrepreneurs, and we call them Spice Money Adhikaris, who operate out of villages with a smartphone and with a biometric device. And they help these 20 million customers access various banking and other financial services. So I'm not even sure how many of us actually know about this product called, or exactly know how this product works, called AEPS, which is Aadhaar-enabled payment system. Last financial year, this product actually served almost 32 crore customers in this country. And when we look at, when we walk the streets in Delhi, Mumbai, or any of the top major urban centers, we don't even see this product, right? I mean, UPI we all use, all other digital payment method we use. But the fact is that one of the biggest payment products in the country is APS, serving 32 crore customers. And you go to a village and talk to anyone, people will know कि हाँ आधार से बैंक account में payment कर सकते हैं, right? So this is something, again I'm saying, not visible to us sitting here, but something which is a matter of routine for customers in rural. And the answer, I mean, the reason for that is very simple. India Stack, the first thing that India Stack really did, this Jan Dhan Aadhaar mobile, this Jam Trinity, well known. The first thing it did was it helped open, bank account for almost every citizen in the country, right? So first we had Aadhaar for every citizen in the country. That enabled people to get access to the bank account, right? 5 years back, before this Jan Dhan movement was started, the basic problem was that people didn't have bank accounts, okay? So what this did was enabled Aadhaar as a authentication and consent architecture using eKYC to open a bank account. But the problem actually didn't stop there, right? Because once you have a bank account, if you cannot put in money there and cannot withdraw money, then you won't use the bank account, right? And the bank branches in the ATM network did not grow as the bank accounts grow, right? Jan Dhan scheme alone opened, I think, almost about 45 crore accounts. And the number of bank branches in the country and the ATMs in the country stayed static. The reason being simple, it is just not viable to open more branches, to operate those bank branches and ATMs, to be able to serve the customers with the needs that they have, right? So the ticket sizes and the kind of product needs that the customers in rural have, it's not been viable to, deepen the branch network, And that is where I think this product called AEPS came in. It literally democratized the way, somebody can transact with the bank account. So today, we have these crores of customers who simply walk into a nearby Kirana store. So this Kirana store guy is using a Spice Money app or a similar app with a biometric device. The customer just has to know his Aadhaar number and the name of the bank. It's as simple, right? So you don't need your bank account details, need your Aadhaar number and the bank name, authenticate yourself, and the money moves from your account to the merchant's account, right? So I think this is what this is how we leveraged India Stack and the product, great product called APS created by NPCI and UIDAI, which has enabled people to now be able to access their bank account. As a result, people are now comfortable, for example, calling money into their bank accounts because they can get access to that. So I think that's the first big step towards financial inclusion. But again, I think it doesn't stop here. The real meaning of financial inclusion is when everyone can get access to be able to save, borrow, and protect themselves with the financial services. So whether it is savings, credit, and insurance, they should all be available to every citizen in this country in the manner that is most convenient to them, right? And I think that is where I would say that the next phase of leveraging India Stack has to really come in. The challenge is that the products that the rural consumers need, they have to be, so the first challenge is the product they need, they have to be built grounds up, right? So, the savings product that we use or the insurance product that we use, or even the kind of, borrowings that we do, the needs are very different in rural India, right? Somebody can take a, 20,000 rupee loan and completely change his livelihood when it comes to rural India, right? Now, how are we going to provide that 20,000 rupee loan to somebody who does not have a data trail? There is no credit history, right? But is it possible using the mix of India Stack, I think the whole India Stack, and somebody sitting in that village who's fully digital savvy, who's digitally literate, who is financially literate, to help the customer get acquainted with these products and also help the customer access these products, right? So where are we today, right, in terms of how do we take this forward, right? I think one thing, I would like to call out that, primarily it seems like financial inclusion, we see government talking about it a great deal. We see the regulators really wanting to make it happen. It seems like a social cause and attracts very little attention from the private sector, right? Now, when we look around, all of these new infrastructures are getting built, right? And these are great infrastructure, right? So whether we talk about account aggregator, right? A great idea of being able to access your data with a great consent architecture. We talk about OCAN, right? Again, a great, thought process around democratizing credit. I think the challenge that we face more often is that is the ecosystem keeping in mind that rural consumer who may not have a smartphone in his hand or may not be digitally literate to be able to do this in a matter of seconds, right? I mean, we are used to a life where we want our grocery in 10 minutes now, right? But this is a consumer who is, who is okay taking help, but is there a product available for them to be able to take access? And I think that is where I would like to, we would, at least as Spice Money, would like to work with the ecosystem, with all the players in this ecosystem to make sure then when we are building these new platforms and architecture, they're also built keeping in mind the rural consumer in mind. For example, I think every consent architecture should also be built keeping in mind that the customer can come and do a biometric authentication and not just a OTP-based authentication, right? Because again, you go to rural, people's Aadhaar numbers and mobile numbers are not linked. So how do you get them to authenticate themselves? Right? So I think these might seem nuances, but they go a long way in actually being, and actually converting the dream of financial inclusion into reality. Thanks.
Thanks, Rajneesh. I think very apt the way you summarized. Just wanted to add a couple of points. So APS has been a backbone for many Indians, especially during the pandemic. So most of you would recall the economic package which the finance minister had released. APS, in fact, enabled cash outs across the country, right? And that was the time when we saw the power of the channel. I mean, how a branchless banking channel can function to its full extent. We now have Ram sir. He has been a force behind several innovations what have come from NPCI. And he now chairs the face. It's practically the face for fintechs in the country, right, sir? So we would love to hear from you on your perspective of how are the new age fintechs working to access these consumers without compromising on what one should call prudent banking norms, as well as what could be the right recourse to effective grievance redressal.
Thank you. Good evening, everybody. I have worked in this banking and digital and payments area for last 43 years, and I'm very happy the way the people have said that they're working towards financial inclusion. But I'm going to give you a little bit a different story. Before I give the story, let me tell you that a research has been done by World Bank, and this has been validated by Indian Institute of Applied Economics, which says that an inclusive society adds 1% to the GDP of the country. We have done a good job. But then today, if you see the Financial Inclusion Index of RBI, it says that as of 1st April 2021, the index is 53.9. That means the delta which has to do about 47. The second thing is that there's another data says that 190 million people in India still do not have a bank account. 340 million people are not adequately banked. That means they do not have all the 5 pillars of financial inclusion. So what we are doing? We are simply talking about creating a technology and creating a kind of supply which is not conducive to the people in the rural area. We need technology which is good for the rural side. And there RBI is very serious, and they have created a policy paper for 2019-24, and this is done, they have done in collaboration with other regulators. And they said that we have to concentrate and make sure that each and every citizen in India has got a basic banking services, they have the adequate credit, which is safe, secure, and economical. They should have insurance, life as well as health, and they should have a good saving product. And of course, they should be digitally literate. The assisted model will not go beyond a point. I am very appreciative of few rural-centric fintech like Spice Money and Pay Nearby. They have really gone to the last mile, understood their problem, trying to make it or migrate them from self-assisted to DIY, do it yourself. And this is the way one should done. As regard to the credit, we thought that looking to the success of Sadhan and MFIN, let's create an organization which is not for profit, independent, who can help the people to understand what they are borrowing, from whom they are borrowing, and what is the cost of borrow. And that's why top 10 leading digital lenders, they have come together and created a voluntary forum which is known as FACE, Fintech Association for Consumer Empowerment. It is the only one association is there which is working for the consumers. And what they have done, they have created a repository. They have gone to the consumers and asking them that what is the cost. So the entire transparency has been created. Aligned with thought process of Reserve Bank of India, this organization is working to make sure that the people by and large who are literate or semi-literate, they should not be duped by this app-based digital lenders, which is coming every day. You find that 600 apps have been deleted, or 700 apps have been deleted. What we are trying to make that a very, very responsible kind of platform where people can borrow even 500 rupee. And the 500 rupee borrowing is also going to be economical and a viable proposition for the lender. They're using the best of technology, AI, ML, and some of the psychometric tests to find out that financial behavior of the person. My request to all of you, kindly be aligned to that and make sure that people who are in the rural side of the country, they should be given the same benefit which is available to people in Bombay and Delhi. And then you can connect this Bharat with India. Otherwise, all this exercise will happen in the air-conditioned room like this. Nothing will go to the people who really need that. You need an app, you have Google, you have PhonePe, but I am sitting in a village 50 kilometers away from the mainstream and I want to send money to my father. What do I do? That exactly you should create, and when you create this, then it is really you are doing something for the nation, otherwise you are doing for yourself. And I'm not very happy about all these things which is happening together. Thank you.
Thank you, Ram sir. I think you're very correct when you say that while disruption is happening, and we in the urban and peri-urban areas are the primary consumers of this disruption, there's a separate set of community which is still left behind, partly due to digital divide, partly due to a lack of acceptance infrastructure, and majorly due to a lack of informed strategies around product, around channel, around the use cases that can be targeted. Right? So, picking a cue from what you said, Ram sir, I'll now go to Vinay. I mean, so Vinay, you spoke about OKIN and the account aggregator model, right? I mean, we have seen many big players also coming into the race. So we would love to know from you that how do we take this account aggregator model, OKIN, and how do we maximize the benefits for the low-income people who have been primarily excluded from the financial system?
Sure. Thanks for that question. So we've been doing account aggregators in a very nascent stage as of today. If you remember today's graph of Chief Economic Advisor on the UPI, before it took off 1,250 times, this is at the foundation level where UPI was in 2015-16 types. So we've been running multiple pilots on how to enable it in a feature phone, providing consented data on a feature phone. How can that be possible? This is still at a very pilot stage. And there are certain ground level challenges also that's as an ecosystem is trying to address. The phone number is not linked to the bank account. In one case we saw for an entire village while opening an account, the Sarpanch has given the mobile number for everyone. So it means all OTP, everything is going to the Sarpanch, and he practically runs a PFM for the village. So that is something that we are solving at a trying to solve it at a ground level, how to break this up. Second thing with an OKIN, what is the government and the India Stack is also trying is to come up with something called as a GST Sahai, where GST invoice can be financed. And the advantage of an OKIN is instead of a seller, an MSME seller who is selling it to another MSME of an invoice amount of 1,000 rupees, instead of this seller knocking the doors of multiple banks through an app-based, government-endorsed, securely consented data sharing, the banks will come to him with an offers, which means the seller has flexibility to choose what is the best offer that is suitable to him or her, whether in terms of a rate of interest or favorable payable terms, etc. And that is something that because the data is available at a low cost for the lenders or the fintech serving on it, they can come up with a much better model, much lower ticket size of lending, maybe at a lower rate of interest that is favorable to this seller. So this opens up a new plethora of use cases. Some fintechs will focus on an urban side, some fintechs will focus on some of the rural side, specifically solving to these cases. Some will open up specifically on an invoice financing. We've already seen purchase order financing happening. So that the moment things open up, data is democratized, interesting use cases will come up, specifically solving to segments of people.
Thanks, Vinay. And it's quite an optimistic view, and I support you completely with that. Because that's how we also operate with the different use cases that we anticipate coming in. So talking of use cases, so Riju, I mean, my next question to you would be that, I mean, do you see any further disruption in the retail payment space? Because before the pandemic, we were quite happy with what we had. Then the pandemic happened, and then we saw like large number of new to digital payments customers, and even the new merchants started accepting payments through QR codes primarily, right? But as he was mentioning about the different use cases, do you see any further disruptions happening? Are there any specific use cases which are still to be tapped?
Sure, yeah. I mean, I think I'll maybe answer that in two parts, right? One may be retail payments, and the second in the space of financial products, right? So firstly, in retail payments, I think one of the more visible changes that maybe could happen in the near future is probably contactless payments that we can see, right? So today we have a scan and pay through UPI, which is pretty ubiquitous, right? But now we have these contactless cards getting issued, right? And in future, probably these cards would even be saved on your phone. So these would be just virtual cards, and your phone would be the physical card actually, right? So just tap and pay, right, as a mode of payment, and how that plays out against scan and pay, you know, which is pretty popular today. So that's an interesting battle, so to speak, and we don't know how that plays out. And I think the acquiring infrastructure, right, which is your point of sale, and how that evolves would be pretty a determinant factor in how things shape up, right? Which is why, so we've recently launched a soft POS, right? And the idea is instead of a device, right, you can just launch an app on the App Store, which you can download on your phone, and your phone should be able to accept all kinds of payments and be compliant with the latest updates, right? So for instance, right, you would want to save your card on your phone and even scan and pay using that, just for example, right? So all your QR codes would need an update, right, to be able to implement that. So that is one on the retail payment side. On the other side, on financial products, I think just picking up from where Vinay, I think mentioned, I think how do we enable, I think Vinay mentioned, invoice financing. I think, and one of the feedbacks we get also by talking to a lot of fintechs is how do you enable credit lines and how to deliver credit lines, especially for businesses, right? Fully agreed on using GST data for underwriting, right? And how do you kind of, because lines tend to be more flexible, you can use them on demand, those kind of things rather than an invoice. So yeah, so those are some of the things. So what we have done is, from the first 5-6 years of our journey, we're embedding payments. Right now we are kind of getting into embedding or helping businesses build financial services very quickly, right? So that's kind of some of the new initiatives we are exploring. How can you kind of build a virtual account, build a new bank, how can you issue card, how can you issue a credit line, right? How can we enable that? So those are some of the problems we are grappling with today.
Thanks, Riju. So I would like to now move on to the credit aspect of the business. So Vinay, Vijay, I'm back towards you. So, see, BNP is a very noble concept. I mean, it's been around in the Southeast Asian market for quite some time. In India, it has existed in different shapes and forms, but the way it is getting disrupted right now, it's been unprecedented. I mean, for some to say. Do you see any further disruptions happening for a specific category of consumers of your credit? Which involve small merchants, right? Small businesses or nano enterprises, because these are the set of customers who are either looking towards the bank for credit. I mean, through various government schemes like the street vendor financing program, but due to certain documentation issues and all, I mean, they are not able to access it. These are the same set of people who are looking towards urban MFIs to fill the credit gap, but again, I mean, they also have the limit in terms of outreach. With the form factor getting changed, I mean, with the middlemen getting away, I mean, do you see any further disruptions in the BNP space? And just to add, I mean, how India Stack can help you in managing the unit economics?
I think very interesting question, right? Because we internally also continue to discuss what is the next level of disruption and where the next set of clients are coming in, right? And how the entire BNPL is going to pan out. So before I get on to it, in India, the NPAs, right, for the industry are roughly 7-8%, right? I'm talking about all financial institutions put together, which means on an average, if I give because of the law of large numbers, if I give loan to 100 people, 7 or 8 of them will default, right? It can be by value and by numbers. And the way, so we all know this fact, right? Which means that there are still 7 to 8% of the borrowers who kind of get to game the system, or probably their financial situation changes and therefore they're not able to pay. Unfortunately, the way the financial institutions or the entire financial institution ecosystem has been looking at credit is more selection, saying that I'll look at a case and I'll select if I want to give money to this or not. I think it is other way around. We should be geared for rejection or omission, saying that whatever comes to me by default, I'll give them a loan unless there is something which is significantly wrong, right? And that is what BNPL has started doing, saying that and basically picking up on what we've been discussing so far, all of us. Can we give very small ticket size loan, 10,000 rupees, 15,000 rupees, right? Can I start building from there? Because what I'm telling you is, I trust you with these 10,000 rupees because there are no red flags. Because you've been performing well in the repayment, I'm going to increase that 10,000 rupees to 20, 25, and 50. Once I have that learning from one strata where I'm active, so right now as RupeeFee, we are extremely active in the Kirana and the consumer durable segment. Once I get my learnings from there, can I replicate those learnings into agri, right? Can I replicate those learnings from urban to rural, right? So basically, these 100,000 customers that we are servicing right now, we look at them as a pilot, right? We look at them as a pilot for probably 100 million more customers that we'll be onboarding over the next couple of years. We are looking at the data in a very different way, and that is enabled because is this working? Yeah, and that is enabled because one, the way we look at the data, and also the way the data has been available because of the India Stack. And third, the entire OCAIN infrastructure, right? So OCAIN infrastructure gives you access to the transaction data as well. Now, because the infrastructure is still evolving, there are some hacks that we found out and started looking at, started collecting data directly. We've still been able to, we've been successful with the platforms. Now we started replicating that in the offline or the more traditional business where instead of the GTV or GMV, a ledger exists, right? So how can I lead that? And how can I create credit lines from there? So now we started looking at very few data points, saying that if I can establish your identity, if I can establish that you're a genuine business and you've been transacting well, I'll give you credit, and then I'll see if my selection has been wrong, right? So moving from selection to omission, and thereby bringing more and more people into the credit net.
Thanks, and I think all of us in the room would look forward to such disruptions, right? Now I would love to move from the products side to the channel part. That means, sir, I mean, I would want to understand from you the importance of keeping the channel feasible, because with other providers we have seen in past that the product might be good, the communication is in place, but the channel fails to deliver. But in your case, I mean, the channel is the one who's driving these transactions for the 20 million odd customers that you have. So how important is it to make the channel feasible, and what are the interventions that you take from time to time to do so?
So I think the first point is that we don't look at them as a channel. I think we look at them as a primary customer. And I think that kind of significantly changes the lens. I mean, the lens that we wear then changes everything, right? In terms of how do we, what all do we do to make sure that, our adhikaris work in the best interest of the consumer, of course in their best interest, but also in the best interest of the ecosystem, right? So, and I mean, our entire engagement model works around these 1 million Adhikari network. So one is we engage with them digitally, of course, because all the transactions happen on our app. So we know them by data and we engage with them digitally through the app. But we also do very, very regular meetups. And actually, during the pandemic, we learned that actually we can do it far more efficiently and far more productively. So while earlier, holding an event was a huge, effort and cost, now, we can call up meetings very, very quickly, and we do far more frequent meetings with our Adhikari network, And I think that has significantly helped us in being able to understand them, understand their customers better, and also do, product iterations much faster, right? The other, I think, important thing is that, unlike in urban, so if I draw again a comparison, what is our relationship with the shop that we shop in, right? It's transactional relationship, right? So we go, we shop, and we come back. That's it, right? In rural, if somebody has a Kirana store, then the entire village is going to him, and the relationship is definitely not transactional, okay? Now, when that happens, I think that trust between this guy and that customer is then not just a business relationship, right? I mean, people have been staying there for generations, so the relationship is of generations. I think that makes things far more easier, right? And therefore, we don't even feel that there is a channel in between, right? In fact, our adhikaris protect the interests of the consumer, far more fiercely than any brand can ever do, right? I think that's the uniqueness of the model per se.
Yeah, I think it's a very, very great point that you made in terms of making the adhikaris as your primary customers, enabling them at your end. And there's an interesting fact, and I'll just try to give a quick quote. So back, I think a decade back, when we were working with the telco to set up their mobile banking divisions in the country, they were reliant on using their existing channel of GSM agents, right? And even we were not sure if the same channel would work, because our experiments in Africa told us otherwise. Because while selling GSM, you don't interact with customer. The customer would come to your shop, and in 10 to 20 seconds, the transaction would be done. But when you're selling a financial product, as Rajnish rightly mentioned, it's more of a trust issue. The person will only come to you if they trust you, if you're credible enough. So I think that's really important, key takeaway. Ram sir, I don't have a question for you, but since you have spent more than 4 decades in the industry, so we would love to hear from you, how should fintechs now focus on process literacy? Because product literacy, a lot has been done, right? And since your organization is now working towards consumer empowerment, and so how important is for these fintechs to understand the importance of process literacy and what they need to do as part of the interventions to make sure that the consumer gets empowered at the right time?
So today's topic is financial inclusion, a role of India's stack for that. So let me tell you some very facts which you may not like it, that today 270 million people are unique users on the digital platform in India. That means out of 1 billion people who are the banked population, 27% people are using digital channel. So the delta is 73%. What we are doing? We are talking about product, UPI and everything. Yes, good, they have done their job, but they have created only infrastructure. Have you gone to the real customer user and asking them, boss, what you want? He says, boss, I want to transfer money to my father's account. That's it. Whether you do it in IMPS or UPI is none of my business. I want the cheap, economical, safe and secure system, and I want immediate gratification that money has gone. Whether it is reaching in 5 seconds, 10 seconds or half an hour. Nobody is understanding. Everybody is talking BNPL. BNPL is good for the countries where everybody has created a CIBIL score a rating. How you're going to leverage this paying capacity? What's happened to BNPL in US and China? Nobody, please understand and learn from the mistakes of other countries. There's no business. There the MDR is 4%, your cost of operation is 1.2, so you make money. In India, MDR is 0 on RuPay, otherwise is 1%. Your cost of operation is 1.2. Are you making money? You have taken investors fund, there is no cost of fund to you. And tomorrow if you have NPA 1% and 1.5%, what are you going to do? So these are the things we have to think. I'm not saying something is good or bad. And then one more thing which I always say, that country like India, if you want to create an inclusive society, you have to take everybody in confidence. People who are good in digital payments like MasterCard, Visa and others, you talk to them, take their help. They have a better technology also. Try to understand what they have. Create a model where they are also participating in creating an inclusive society for our country. And I have told you that an inclusive society adds 1% in the GDP. And if you want to become top 3 economies in the world, you have to have a collaborative approach. After UPI in 2013, we made a presentation to Mr. Raghuram Rajan. And after that, there's no innovation in this country. There is a good product has come, e-rupee. We have to really promote that, because this is a beginning of creating a CBDC in India. So we really, my request to the regulators also, start regulating fintech, create a GDPR-like Data Security Act in the country and PSD2-like certification stages, so that fintech, if they are competent, they can be regulated, because if they are not going to regulate them, they will create a chaos. The same thing has started happening. 1,200 applications now sold. Today, there's a news that 100 fintech accounts, that the account has been frozen because the money was coming from somewhere else. So my request to all of you, that when your topic is a financial inclusion, let's talk about financial inclusion. Let's see that it reaches to the access to basic banking services happens to everybody in the country. They should have the good credit limit, an affordable credit, affordable insurance, and a good investment product. That is my 2 cents for today.
Thank you so much, Ram sir. We have some time before we close the session, so I would now like to request the audience, if they have any questions for our panel, please share with us.
So we can
this is the,
go ahead for the next session maybe. Are there some question?
So she has a question.
Okay.
Could someone please get her the mic?
Have, I think, just 2 minutes.
Hi panelists, my name is Astha and I am a senior associate with Ikigai Law. We are the legal partners for the event. Can you guys hear me? Okay, great. So I had a question with respect to what India's stack, how India's stack can be updated for remote KYC, which basically means contactless and presence-less KYC. So, I mean, we have Aadhaar-based KYC solutions, we have video KYC, but I mean, can more KYC solutions be incorporated, and, you know, do you think it's possible for the regulations to be updated to enable such solutions? And when I say other remote KYC solutions, I mean selfie-based KYC or alternatives to video KYC, which is frictionless, high cost, and how, you know, that can sort of help in reduction of the KYC cost and reduction of the cost of the financial product in general. So what's your view on this, and probably, I mean, whoever would like to take it. But, more to sum it up, basically, how can we come up with more remote KYC solution, and how can India's stack be evolved to sort of enable that?
Okay. I'm taking this question, but this question is pointed to regulator, not to me. I can tell you that RBI is working out on various options of the KYC. They have a 360-degree view of the entire thing. As and when they'll feel it is conducive, they will open it to that. Have patience till that time.
Okay, all right.
Anyone else would want to add before we close?
So I think one way to visualize this could be, so first of all, I think Aadhaar as a stack is very powerful. I mean, all our biometrics are captured there. It's safe, secure, etc. We've all seen that. So if you visualize a scenario where from your smartphone, your iris or eye scan or iris is captured, which is already there in Aadhaar database, and there is a quick match, I think that to me can be completely frictionless, quick, and quite foolproof. I think that as per my limited understanding, the technology is largely there. I think there are some few gaps, but it's largely there. And then I think it's also about, I think there is a legal framework that still needs to be created, and of course then the regulation needs to follow. But that is how I visualize as a very frictionless KYC going forward.
At the end of the day, a regulated entity has to approve the KYC. That is an RBI guideline. Now we're talking about biometric. 30% people do not have a good biometric fingerprints. In case of iris, 24% people have got cataract in their eyes, and then iris is not coming properly. So that's why I'm saying that, yes, RBI is aware of this thing. They're working on this. They try to work out. Otherwise, the UPI 3.0 was supposed to come where your PIN was to be replaced with your iris kind of structure, and the project was known as a Smile to Pay, but still some things being there, security related problem is there, that's why it's been put on hold.
Thank you so much, sir, and I know we have overshot by 2 minutes, so thank you audience for bearing with us, especially in the graveyard shift. I hope this discussion was valuable for you. Thank you so much all the panelists. I mean, I think it's really good to learn about your experiences at an organization and your insights in what you have learned. I mean, how do you learn from the successes and more from the failures? And it's really important for all of us that you have given us food for thought of what disruptions you see in the near future. So thank you so much, and we hope to have more meaningful discussions like this. Thank you.
Okay, thank you so much.
I had a one question. May I?
Maybe if questions can be taken later or one-to-one basis, because I think we are on next session. Okay, all right.
Yeah, thank you so much. So basically, sir, my question would rather be from the all panelists, right? So I'm Vishal Tiwari, right? I work with India Accelerator. We are basically a seed-based accelerator where we are helping startups, business connections, growth funding, fundraising, etc. Right, and I am dealing with fintech industry as a whole, right, and helping fintech startups to grow, right, wherein the tech majority of the fintech startups that come to us are early stage pre-seed level, right, and they need probably help with the investment size that we do, right. Apart from that, tech stack they already have. So is there any underlying problem that fintech startups normally face, right? One would be the legal framework that they want to get into. Right, because before starting they have to be aware as to what are the RBI guidelines. Right, apart from that, the technical stacks that they will have to follow. Right, I help them with connecting with the right partners who help them with the API integrations, also banking and NBFCs. So would you suggest me some other kind of solution that I can provide to my fintech startups to accelerate their growth process?
Yeah, so I think we also get reached out by a lot of fintech startups, right, who want to start using solutions, right? So general advice for all fintech startups when they're starting out is to read the RBI notifications very carefully, right? I mean, RBI issues notifications and circulars, and so does NPCI, right? And not just from the regulatory perspective, I think in terms of the innovations that's going to happen, a lot of that is lying in those circulars, right? So that's kind of should be the Bible, I would say, right? Like for fintech founders that, start up, and I think there's a lot of information that's there, that could be gone through.
Right, sir. So as Ramso was mentioning earlier, that there should be a collaborative economy as such, right? So I normally suggest startups to also, like while they are in the early stages, probably ideation phases, to also get in touch with the banks and the PSUs, probably get to know about what are the pain areas, right, which these giants are already facing, right? And probably we can add more value to the system. Thank you so much.
So the reason why there are so many fintechs, and as a country we've been very successful in churning out fintechs, right, and some of very successful fintechs also, was the lack of regulations. And so I beg to differ here with you. The innovation comes when there is no regulation, right? If you start regulating, then you're defining constraints, and when you start defining constraints, you're defining what can be innovated and what cannot be. And I'll suggest if there are people who are trying to build their own fintech, right, talk to more like-minded people. They don't have to be necessarily from the industry, right, but who see the problem with the same lens and start solving it, right? And that is the only way to do it. Had that not been the approach, had we been dictated by regulations, had we been dictated by banks in terms of what my pain points are and how you are going to solve it, we would have been a very constrained ecosystem, which we are not, and we should be proud of it, right? And so basically, I know you have
I'm with you, but what I'm trying to say, when you're dealing with public's money, you have to be mindful that we are working in a democratic country where each and every person has a say. If one person is losing a rupee, he can go to anybody, and so that's it. Innovation has to be done. It has to be properly incubated and then rolled it out. Right?
Thank you. I guess I had celebrated the end of the session a couple of minutes before, but again, thank you so much for bearing with us, and thank you so much, our esteemed panelists. It was great, and we look forward to the future. I mean, with such minds being there in the country. Thank you so much.
Thank you all the panelists and our moderator for the session. We'll have another very interesting session now, streamlining digital payments for Indian consumers. And the moderator for this session is Sri Amol Kulkarni, Director, Cuts International. And the panelists are Ms. Ambika Khurana, Director, Public Policy, Netflix. She will be joining us virtually. And we have Sri Vishal Mehta, Chairperson, MPAI. Also in this session, we have Srimati Aruna Sharma, Practitioner, Development Economist, and former Secretary, Government of India. Another panelists are Sri Sijo Kuruvilla George, Executive Director, ADIF, and Ms. Aparajita Srivastav, Partner, Ikigai Law. Sri Shailesh Paul, Head of Merchant Sales and Acquiring, and CyberSource, India and South Asia Visa. So these are the eminent panelists for this session, which we are going to start in a short while from now. And the session is on streamlining digital payments for Indian consumers. There must be many questions in the minds of participants as to what is going to be discussed during this interesting session. It is going to be 45 to 50-minute session, and we would request our panelists to be brief. So let's welcome our panelists. no, carry on. You can keep with you. I think all people are carrying along. How do we ensure consumer interest remains paramount, conceptualizing the future of digital payment, and so on. Many questions. So over to the moderator of this session, Shri Amol Kulkarni, Director, Cuts International. Please go ahead.
Thank you. And it's a pleasure to be here. Good evening, everybody. My name is Amol. I represent Cuts International. Cuts is a consumer-facing research and advocacy organization. I understand that we have been 1.5 days of intense discussions on fintech, its potential, and the way forward. And this is the last panel of the day. So we'll try to keep it a bit exciting, have good discussions with our eminent panelists. The theme of the session is streamlining digital payments. When we talk about streamlining digital payments for Indian consumers, there are 3 things which typically comes into mind. Making digital payments safe, secure, and seamless for consumers. A lot of discussion on some of these themes have happened in previous 1.5 days, particularly the session just before, in terms of financial inclusion, accessibility, and making finance work for all. We'll take it a level further by talking with a list of eminent panels who represent different stakeholder point of views and understanding from them what it takes for different stakeholders to work together and make digital payments safe, secure, and seamless for consumers. As has already been announced, we have Madam Aruna Sharma, who has been with the government. Aparajita works with the law firm, Ikigai Law, and regularly interacts with regulators and PCI. Ambika is joining virtually. She is with Netflix, so we have merchant representation. Shailesh represents traditional players. Sijo works a lot with startups, so we have that perspective. And Vishal, while being president of Merchant Payments Alliance, he also works with Microsoft and can give us a lot of perspective of on-ground work that the industry is doing. So for this panel, I'd like to invite each of the panelists to provide their opening remarks for a minute or so, just to set the stage about what their perspective is to make digital payments safe, secure, and seamless for consumers. After which, what I intend to do is to ask pointed questions to each of the panelists. And then, based on their responses, hopefully, we'll open the floor for the audience for more questions and a good, healthy, interactive discussion. So, can we start with Dr. Aruna Sharma, please, ma'am? Would you like to?
Thank you so much. And definitely, what I would like to say right in the beginning is that whatever policies or whatever functioning or whatever regulations are coming, it has to be consumer in the center point. It cannot be convenience of either the banks or the card issuer or the card acquirer or the payment gateways or the merchants. And whether everything is flying conducive to it, giving options and having passed the test of security, which is internationally accepted, is very important. And whether these two are working in conflict with each other, that is something, is a matter of debate. That is something which has to be at the discussion table. If these two are in conflict, then what wins, or where does the compromise starts? And that's where I think the consumer's convenience and the over-consciousness of security are the resulting into a clash, delays, complications. that is something one should deliberate upon as we move ahead.
Sure. Thank you so much, Dr. Sharma. I think you have started the discussion on a very right note in terms of highlighting the point of no trade-off between convenience and security. I think with that, I would like to move on to Aparajita as to how do you see this theme and what are your initial thoughts?
Sure. So I think a lot has been said about regulation in fintech, right? And I know in the last panel there was also some discussion on where do you fall on the spectrum between over-regulating and between innovation. But I think philosophically the business of moving, collecting, lending money will always be regulated. It's how far in the regulatory value chain that you fall. It's that which will determine how much you can innovate and what kind of elbow room do you have to actually take a few risks. But principally, if you're lending, collecting, moving money, it is a highly regulated activity. And we should actually welcome and work with regulation, not see sort of regulation as an adversary.
Great point, Aparajita. Optimal regulation is the key, is what I hear from you. And we need to work with the regulators and not see it as a barrier. Shailesh, you have been in the ecosystem for a very long time. How do you see the ecosystem emerging and what are your initial thoughts?
Certainly, and thank you for the question. I'm going to take 2 minutes because that was the original plan. But just being in payments at this point of time in India, I think it gives you an immense sense of purpose because there's so much progress that has happened, particularly in the last 20 years. A lot of that got accelerated after 2016 as it relates to digital payments. But there's so much more to do, right? The cash part of the economy is still a very prominent part, and we're sort of all laboring away at that as an industry. So it gives you a sense of purpose, it gives you a sense of responsibility, but it also makes payments and digital payments in particular to be the most exciting place to be at the moment. Now, how does one approach the subject of seamless digital payments? 3 principles that we apply in our business and we engage with our partners on. One is in terms of access and inclusion, right? As a company, Visa talks about ourselves as being the best way to pay for everyone everywhere. We take that quite seriously. What that means is we have to also be as mindful of the seller as we are of the buyer. And you talked about consumer first. Very obsessed around getting small merchants digitized because there is a very large population of small merchants in India that don't have access to digital commerce. So these are just some of the thoughts in terms of being inclusive. Secondly, making sure that the customer experience is appropriate for the task at hand. And third, reflecting on what Arunaji you just said, security first. It's not convenience or security, it's convenience and security. So those are just some of the principles that I would look at when we approach the topic.
Thanks, Shailesh. I think very, very important points. We have come a long way forward, but there's a lot of road to cover as we move forward. And with that, I would like to move on to virtual. Ambika, who has joined virtually. Ambika, your initial thoughts on the subject and what do you think about what has been said till now? Thanks.
Thank you, Amol, for the opportunity and sincere apologies I could not join in person. I'd like to make 2 remarks. One, I think it's a very exciting time for all of us as merchants, as consumers, to be in the Indian digital economy space as we work towards a trillion dollar digital economy and the audience and focus on streamlining digital payments being so high. So I think it's a very exciting time. This time also gives us a lot of opportunity to ensure that
Thanks, Ambika. So absolutely right. Intent needs to be matched with implementation. That is what is really, really important. And so over to Sijo. Sijo has been working a lot with startups. So what is your thought and experience on this?
Sure. Thanks, Amol. Good afternoon, good evening, everyone. So I represent the startup space. I have been a founder myself. Just to build on what Shailesh just mentioned in terms of the shift that has happened in the last 20 years or so. When I first started my startup back in 2005, 2007, getting a payment gateway was actually the biggest determinant of success. It was a ridiculous process of filling out countless forms and hoping that the banks will be merciful to provide you a payment gateway. And then you provide an exorbitant fee of, I still don't recall exact numbers, but it was somewhere in the 8-12%, which would have probably not even made our business viable at that point in time. From that standpoint, from where we are right now, when we have the chai pan wala actually telling you, "Arey yaar, Paytm kar lo," right? The monumental shift that has happened is insanely great. To the point where, yes, granted, there are a number of unicorns that has benefited in the fintech space. But if you look at the everyday entrepreneur that has benefited, one of the adages that go in the entrepreneurship community is that you should be free to focus on your product and service and not exactly the plumbing. And today in the fintech world, has enabled that for every entrepreneur in the country. And there is a pivotal shift post UPI. And today in this particular forum, we are essentially talking about safety at scale. So the threshold that we have crossed as ecosystem is brilliant. And on that count, as a country, we are probably providing the truly right solution for a payment ecosystem for a digital and internet-first world. Part of the reason the entire internet economy operated on an ad sustainable model was that payments friction was insanely high in a digital world. All of us have been there, and it was not really a safe space to operate internet to make payments work, right? Half the time when you scroll through websites, all the most early days of internet, you have ads popping up every day, you have memes around it. So it never became a safe option for you to make payment. From that standpoint, where we are right now, the sheer ubiquity of UPI and other payment mechanisms in the country, and the strides that RBI has been making, RBI and NPSA have been excellent stewards of this particular reality that's coming about. And just in today's morning session, one gentleman also mentioned that we should probably just keep doing more of what we're doing. We're definitely doing something right. As a percentage of the fraud transactions, the number is actually minuscule. So yes, we still have a lot of work to do. But having said that, as an ecosystem, as a player global, we are continuing to create more and more benchmarks, and that is extremely exciting for everybody in this particular room, all the more from the startup community as well.
Thanks, Sijo. I think we have done a lot. We need to do a lot. We need to continue to do what we are doing, but also continue to improve in terms of where we are falling short. And I think that is something that we need to focus on if we need to put consumers first. And with that, Vishal, your initial thoughts?
I think most of the panelists have said, what I had to, but one thing is, while, we are talking about consumer first, the first touch point for the consumers are actually the merchants. And keeping merchants outside of the regulatory overview and out of the, regulatory conversations would be disastrous, which is the reason why we, along with a few other merchants, formed the MPI, or the Merchant Payments Alliance of India. And going on that, we have got good traction when we are talking with the regulator and presenting our points of view. It has made, the regulator notice that, okay, merchant view is also important, and, the payment regulation and, bringing up the different payment forms together does not end with what regulator oversees, but the merchants are an essential part of the ecosystem. So consumer touch points, having merchants as a first point of contact is necessary that the merchant view is taken into account. That's more than anything else. And lastly, India is definitely seen as a benchmark when it comes to UPI and real-time payment systems. No one has actually In fact, there are white papers in the US with the federal government that the Indian UPI system is worth replicating for the real-time payment systems as well. So I think that is where India has definitely packed a punch. That said, we still have a lot of ground to cover when it comes to financial literacy and grievance redressal, because we are hearing every now and then the challenges which a lot of consumers are facing with UPI-related fraud, and how we can address them is definitely something should be top of the priority.
Thanks, Vishal. I think a lot of good points, particularly in terms of expanding the consultation from the traditional players to a larger ecosystem, and also focusing on grievance redress and other challenges which consumers are facing. So which brings me to the round two, and wherein I'll deep dive on some of the specific themes which came up. Dr. Sharma, I would like to start with you. Also pointed about that there is no trade-off between safety and seamless payments. Now, first is, why do you think that while there has been a broad-based policy vision to push digital payments and make India a digital-first economy, why do you think that there has been this concern about that there seems to be a trade-off? Secondly, I also want you to think about what Vishal has said, that a lot of times there are a lot of grievances which go unnoticed. And there is a lot of work which needs to be done in dispute resolution, grievance redress, for fraud management. So in such scenario, would it make sense to, say, take safety or security over convenience, or do you still think that there is potential to treat both equally and allow innovation to take care of safety risks and grievance redress related issues? Over to you, ma'am.
Thank you. See, actually, in digital payment scenario, we have traveled a long way. We all know that NPCI started in 2010, and then I was involved when we started DBT in 2012, marking all the IT systems of the bank. And we had hilarious incidents that payments were not done because that person was on leave. There was a manual code the person has to put at the headquarters of a particular nationalized bank. So we faced all these problems, and from there we have graduated quite a lot, with post offices now getting digitized, which were not digitized, and we were compromising with 20 days delay in that, and now cooperative banks are done. From there, we have come to the scenario of digital payment, 7,500 crores of rupees, and 33% increase. But what Shailesh very rightly said, that the cash economy is still 29 lakh crores. And that is where the challenge lies, how we bring that cash economy also in the digital platform. Many of the reasons is escaping the tax, income tax and GST. So that is one of the major reasons which we are in dialogue, which does not come in digital payment, to remove that. But coming to the digital payment scenario, when we are coming, yes, ease is there. But we still have hiccups into the payment systems which is coming through the regulators. We had e-mandate, and yesterday itself, the e-mandate threshold has been increased from 5,000 to 15,000 rupees, because it was creating a lot of disruptions into the standing instructions. When we got the debit card into the standing instruction scenario, we thought we have overcome the problem. But then e-mandate again put us back a couple of steps back, and then again we had to argue upon it, and now it is 15,000. So one good thing is there is a constant dialogue between the operators and the regulator, and they are ready to step back if need be and modify. So that is a very good signal which came yesterday when we are going ahead. And similarly, when you are talking about the security, I will say that when we thought of e-mandate and e-mandate coming into it, it is minuscule. The fraud that is happening is in decimals, right? So do we need to have a system? It is like wo makhi ko marne ke liye talwar istemal to nahi kar rahe. So therefore, it is very, very important that are we getting into a system which is going to create more problems than the solutions, and that I'm saying from tokenization point of view. Because in tokenizations, what Vishal very rightly said, The merchant is the first phase which comes to the consumer. And many of the fence sitters, when the e-mandate was 5,000, they slipped. And now you have the fence sitters in tokenization, they may slip. So instead of digitization, will they be going back into the cash mode? And that is where the challenge lies. And here the bankers are not ready. Yesterday in the press conference, I think the director who is responsible for this was non-committal whether the date will be extended, but he was very clear that preparedness level is not there. People like Shailesh are prepared, but the banks are not prepared. Right, so you have a system where it is not prepared. So when you're talking about security and the convenience of the consumer, the idea is we don't want consumer which has come into the digital world to slip back into the cash mode just because of the difficulties that it will have. In e-mandate, the moment you are asking for an additional authentication, right? So that kind of a thing upsets the people. And you have an entire age group of people who are now into the digital payment world. So for them, you have to think about the convenience of them, where by taking help of youngster, they have done the job once, and CVV was the only thing they were remembering. But now, with 15,000 extension, hopefully, it will going to be smooth once they enter into, once they give the signal for the e-mandate and their recurring payments stand. The biggest hit was the LIC payment, because there was hardly anybody who was not in the loop of LIC payment. And they all were working on standing instructions, because tendency is to forget when the due date comes. But now what it has ended up into is it created complications in the initial months. Some of the premiums did not reach on time. Some of the T premiums bounced back. And God willing, if there was a death en route, that would have created or added more complications to LIC to settle, because premium was not recorded in their system. And that is what created more of a problems. So therefore, it is very important when we are talking about security, it is to pilot test it and then sort of roll it down. Now, e-mandate increase to 15,000 is wonderful. Tokenization is something which has to be rolled down only when everybody is prepared. Because I don't see that another 1 year, the end point, Vishal, right, will be prepared to take it up and to execute it. And that is where the challenge lies. And that is where the debate has to be constantly done with the regulator, that yes, security is prime, consumer security is prime, but the incidence of security breach is minimal. What has been accepted internationally is there. UPI have been proven to be a safer system and has gone well. RuPay card, in Jan Dhan, we distributed RuPay card. But that is not the population. In numbers, it may look big, but that is not a population which use card. So even if they have moved to digital payment, they have gone through the mobile mode, right? So they have gone through the payment gateways, and they have not gone to swapping the cards in the POS machine. So that is a thing. So numbers, the RuPay card is huge. If you look at the population of RuPay card vis-a-vis the other cards, but the users or the use of the RuPay card is minimalistic. But one problem I do have, right, all these card issuers or the card makers, that why don't you come with the vernaculars? Because if we want a penetration deep down, the name has to be in vernacular. The numbers are Roman, no problems. That is what the Constitution says. But the name should be in vernaculars, because it then enables them to identify the card and use the card and use it effectively. This is something we have not been able to do it, even after talking to all the banks. And they came with a very slip-slop system of stickers on it. You don't know, I'm not a very happy space to be in. So I will just like to wrap it up by saying that security concern is fine. One-off incident happened, but that one-off incident has to be treated effectively. And the corrections need not be that solution becomes more complicated and there is a slippage of fence sitters into the cash economy. And that time has to be given, because without preparedness, if we try to push it, I think we are inviting more problems than finding a solution to the consumer.
Thanks, Dr. Sharma. I think very, very important points in terms of while the market has moved on, the market has matured, but perhaps the mindset has not. As a result of which, this mismatch is creating a lot of conflict in terms of what should regulators focus on and what they should not be. One-size-fits-all approach perhaps does not work. The regulation needs to be proportionate and risk-based is what you are mentioning. And some of the innovations which should have happened ages ago have still not seen light of the day. And with that, I would like to move to Aprajita. In terms of, do you concur with Dr. Sharma because you have been interacting with the regulators a lot? You also talked about in your opening remarks about regulation should be viewed as an enabler and not as a disabler. So what is your feel when you talk to regulators, particularly RBI and entities like NPCI? There have also been concerns about regulators not pushing some of the players in the ecosystem enough to make the ecosystem ready. There have also been on tokenization and other such issues. And also there have been concerns about lack of data, lack of information in public domain in terms of are we ready yet, whether this would not be another disruption like e-mandate which happened 9 months ago. So what is your thoughts on these issues depending on your interaction with regulators?
Sure. So I think 2 points I want to make on this, right? I mean, the first is, and I completely agree with Vishal on this one, that we've excluded a lot of tech players, unregulated players, merchants from conversations which they should have been a part of. Ultimately, when the regulator makes a policy, a brunt of that kind of repercussion is borne by the merchant, is borne by the technology player in between. Now, the way the current sort of regulatory framework is built, and I'll just spend a minute just sort of explaining philosophically how it's built. The regulator regulates a financial institution, say a bank or an NBFC. It says, look, if something goes wrong with your functioning, I'll catch your neck. These entities in turn regulate through contract their tech service providers. Basically, they're outsourced service providers. They are charged with keeping these satellite entities within orbit. So if a tech service provider, a co-branding partner, a technology service provider, a TPAP strays from its outsourced function, encroaches on the regulated core function, it is the regulated entity that will be in hot water with the regulator, not the outsourced service provider always. So philosophically, it's this kind of two-step regulation. This, in a lot of ways, was a blessing for the fintech ecosystem, right? You're one step removed from the regulator. You have a shock absorber as the bank in between. But at the same time, what happened is that these critical entities, these digital distribution layers, they didn't have a seat with the regulator. They didn't have their voices sort of being heard by the policymakers in terms of how policy decisions would impact their businesses and their ability to comply with these regulations which are passed on from the regulated entity, from the payment system operator to them. And I think that is, that's an aspect of policy making that can see some change. The second thing I would say is that it's great to speak about regulation. It's great to speak about bringing people into the, the right people into the fore and making the policy decisions, be it merchants, be it unregulated fintech players. But there is also a question of capacity to regulate. The way that fintech has sort of boomed in the past 5 to 7 years, and the number of entrants in this space, the sophistication of frauds that's occurring, the regulator, quite frankly, would be playing catch-up just in terms of enforcing its own regulations, not merely coming out with regulations and then seeing the regulations being disregarded by the industry. A way to sort of, I think, solve for that is to have a robust SRO framework, a self-regulatory framework, where every single financial technology product has self-regulatory codes. Self-regulation does two things. One, it frees up the regulator to look at the larger frauds or the larger compliance glitches. And two, I think more importantly, what it does is it self-cleans the industry. Once you have an industry in which you have prevalent frauds, completely unchecked data usage, you have consumer interest is being hurt, the regulations which are already existing, and a regulator doesn't have the capacity to enforce those regulations, you're in a space where you can see knee-jerk kind of reactions by the regulator, just sort of, let's ban it. We can't control it, let's ban it kind of regulation. So I think that is where an SRO framework can come in and kind of have an industry consensus on what is the basic standards for data usage, for keeping the customer's interest in check, and growing in a manner that is healthy. Otherwise, at the moment, I think what's happening is that the players that are being more compliant, they are seeing their funnel conversion rates go lower than players which are saying, let's take every consent in the terms and conditions of that a customer signs up to, which by the way only the lawyers read. Nobody else is reading those terms and conditions. So I think that's one aspect, right? Bringing merchants into the consultation process, bringing financial tech entities into the consultation process. I think the tokenization conversation would have been slightly different had these players come in right from the beginning and said how disruptive it could be, how disruptive these timelines could be. And at the same time, also having an SRO framework which specifically governs data usage. I'll give you an example, right? Digital lending is essentially, a lot of payment companies are using digital lending to monetize, right? That's their monetization play, that look, payments is either zero or a loss-making kind of business vertical for us. We'll use this treasure trove of payments data that we have on the customer, her spending pattern, and use it to underwrite to then tag on a loan, which is why BNPL and all of these sort of micro-lending features are becoming so prevalent. And then that lending business will then offset the losses of building a digital payments business. What that means is that the data of the customer is being used to profile her to give her a loan, right? And without the correct consent architecture to ask the user consent for using her data, which was collected for payments but then being used for a different purpose, I think we will sort of struggle to have data protection of these borrowers, of these customers. And SRO is a kind of a perfect organization that can help financial tech entities take the right consents at the right time before India has a full-fledged data protection law.
Great points, Rashida. I think one of the things which I wanted to come back to you, but sort of I'll do that later, is if you're saying that there are a set of entities which are currently outside the regulatory ambit and therefore there is a need to expand consultation, which is fine, but also not regulate them directly, but then allow them to self-regulate. Is that something which is asking for too much? Are you asking for too much power without being accountable enough? I'll come back to you on that. And also on the sort of, when you say self-regulation or self-regulatory organization, where is the consumer in SRO? Is it only the fintechs or the third-party players who are outside the regulatory ambit, those are constituting the SRO, or are you thinking about broad-basing your SRO sort of thought process itself? So I'll come back to you with these questions, but before that, I would like to go straight to Shailesh, who has been a regulated entity for quite some time. And what are your thoughts on this sort of a two-step regulation in terms of a regulated entity being accountable for entities whom it is operating with, which has been the traditional model of regulation, versus the need to open up and allow these newer players a seat at the table, which can enable the ecosystem to function, which can perhaps enable the ecosystem to function more smoothly, players can talk to each other, and also ensure that consumers' interest is kept upfront. So your thoughts on some of these issues?
Yeah, well, we've got RBI in the room, and this is really a question for the RBI. But since you asked for a view, look, I think payments by nature has to be inclusive. There is somebody who wants to make a payment, there's somebody who expects to be paid. And if the interests of both those constituencies and all of the service providers are not well represented, then there will always be some challenges. So I think in principle, that makes a lot of sense. What mechanism it takes on, I think is not so much a view that private operators need to bring out. I do want to go back to the origin of this conversation, right? What we're talking about is we're saying, hey, We want to get more adoption of digital payments. To get that adoption of digital payments, we need a good customer experience, we need trust. Neither of those is negotiable. Right, ma'am? Arunaji talked about, at what stage do you make one overweight on the other? And I'd like to submit that you can't, right? They have to work in lockstep. What does, however, happen is that, sometimes to create trust, it's necessary to have a little bit of friction. Sometimes what happens is that the two are not walking in lockstep. But if you sort of roll back a little bit, if you look at the OTPs that were created, the necessity of OTPs for e-commerce transactions, at that point of time, e-commerce was 1% of our commerce. Right? If I looked at card payments in 2008 and 2009, less than 1% for debit cards. Right now, it's more than 50%. That friction created trust. Over a period of time, people got used to that friction, and then they realized maybe we could dispense with some of that friction. That's an evolution. In the same way that EMV cards brought security and stopped skimming of these cards, and today we've evolved to the stage of getting to contactless payments for sub 5,000 rupees. You don't need a PIN. So that evolution, it works in cycles. It doesn't always work in lockstep. I think it's necessary that all of us have to sort of pitch in and make sure that the customer doesn't suffer and the merchants don't suffer. But it's not easy. And I think that's where all of this industry collaboration forums like these are hugely valuable, because there's so many good ideas coming out of these conversations.
Thanks, Shailesh. And I think the organic evolution of how payments function is something that you have explained very nicely. And I think, as you have mentioned, we have come to a point wherein we can do away with some of the things which create friction, but perhaps friction was right when we started with it. Which brings me to Ambika. I think, Ambika, my question to you is slightly different, perhaps because recently it was news that online credit card payments outstripped the offline payments by a mile. And this has been a really force multiplier for the payments ecosystem and for the consumers to ensure that they can subscribe to and they can purchase things that they would like to. How can we continue with this revolution that online credit card spends have started? And what are the key enablers that you think are very, very important in this regard? Over to you, Ambika. Thank you.
Thank you. I think none of us was surprised when online credit card payments kind of took over the opt-in mode. A lot of it could be attributed to our habits that got from machine organization, COVID was a forcing, and just a sheer convenience of doing things online. I think it's pretty much in line with the natural progression of a very fast-growing economy, which we proudly are as India. However, there are some challenges that exist, and my fellow speakers did speak about tokenization. We are almost actually exactly 3 weeks away from the deadline of June 30th. Many of us in this room are very, very worried. There are challenges which we continue to face with tokenized transactions. The ecosystem is not really ready. Irrespective of whether a subscriber, a consumer decides to opt for based on like it happens in the physical world, acquirers are able to process offline transactions using stored coin details. If we can extend it to online transactions as well, it will prevent a lot of possible chaos that the consumers are likely to face. So I think there are solutions to this. We just need to be mindful, cognizant in keeping consumer interest at the forefront and ensuring we don't introduce friction when it's absolutely avoidable.
Thanks, Ambika. I think you had correctly pointed out that friction might have been necessary at a particular point in time, but perhaps we can do away with that with smart regulation and smartly planning the way forward. And we can avoid a lot of disruption going forward within the 3 weeks that are left for the tokenization deadline. And sort of this also, we are also talked about the differential treatment between the online merchants and the offline merchants, which also gives me an opportunity to speak to CJO about are there any other concerns that you think when we talk about payments ecosystem and regulation of payments in terms of differentially treating similarly placed players, or are startups or smaller players unfairly treated in some manner? Can the regulation be more inclusive and more conducive for them to realize their potential? Your thoughts on this, please. Thank you.
So, interesting question, Amol. So, see, at the onset, see, RBI has been a very, I would say, progressive and proactive regulator. Now, even with this tokenization mandate, I don't think anybody here in the panel also is disagreeing with the intent of where it comes from and how it's a far superior thing. And technology evolution has its own advantages also, right? So the dichotomy of is it safety versus convenience that happens in a particular level of technology. When you actually iterate to newer technology levels, the paradigm changes. If you look at card payments versus UPI, UPI is a far more secure and far more scalable situation. Okay, we have debates coming in. But anyway, so from that standpoint, when technology evolution happens, these will shift. And similar is, let's say, the question that you asked, right? Whether bigger players and smaller players are getting differential treatment. See, more and more with the strides UPI is making and RBI is making. Just yesterday, card payments over UPI is also being allowed. Yeah, RuPay as a starting point. So yes, what we can see is that RBI is making these steps in a very calibrated manner. Initially, the payment cycles were 5,000 for recurring. Now it's increased to 15,000. We have seen the same thresholds in the evolution of UPI also, right? UPI initially had thresholds in terms of how much you could transact. So yes, it's being done in a very calibrated manner. But having said that, if you just look at that steps that they're taking, even in terms of the remittances being brought into UPI, the UPI 2.0 framework, everything is actually being done to increase the digital footprint of financial sector in the country. And now we're talking about, even today early morning, we're talking about actually getting more people, the next 500 million, into the framework and everything. This is a large, force multiplier for the entire startup ecosystem altogether. So, and even if you look at this particular tokenization on a mandate, right? In the interim, yes, we need to reimagine some existing workflows, but that happens whenever we have a new paradigm of technology coming in. The number of new workflows that are possible on top of new technology far outsurpasses the existing frameworks. And those benefits are going to accrue over the next 3 to 5 years. And that is where the possibility exists. If you take that as a dimension, I think the younger startups and the younger companies are at an insane advantage. We are even going to see a democratization of the merchant space itself, because the kind of opportunities that you have, the overheads that you have to manage as a younger company is far lesser as compared to what it used to be a fair while back. So to that extent, I think it's heading in an absolutely great direction. What is even more exciting is that UPI is creating footprints for creating payment processing across geographies as well. And these can only bode amazingly well in terms of the downstream and multiplier effect in startup ecosystem. I think ubiquity and access is still the biggest thing to solve. That was really what was plaguing the startup or the fintech sector in the country. And that really has, UPI and this whole fintech revolution has thrown open their seams, and it's going to continue to grow as well. So to that extent, at this point in time, from the larger scheme of things, I would not be worried, Amol.
Thanks, Sijo. Vishal, I just wanted to pick to on one point which you said and asked you about, in the long term, things are going to be fine, but in the short term, there could be disruption. Would that disruption or should that disruption be acceptable to merchants, or should that be acceptable to consumers? Because more often than not, what we have seen, and this is from experience of, say, recurring transactions, that consumer concerns or consumer inconvenience has been considered as a teething concern or teething trouble, transition sort of challenges, which will solve for itself as we move forward, and in the long term, in a couple of years, things would streamline and consumers' convenience will be again up. So is that something which you think is acceptable? Also considering from the global standpoint, when we look at how these transitions happen in other countries in terms of grievance redress, ensuring consumer convenience, what are your thoughts on some of these immediate concerns rather than long-term concerns?
So the answer is no, it's not acceptable. Because even in the e-mandate shift, we've heard of many small companies or small and medium companies shutting down because they were surviving on recurring transactions and subscriptions. And when the subscription stopped all of a sudden, they didn't really have any revenue to move forward. In tokenization, we might see something similar. So I think for all practical purposes, we should avoid something which is avoidable. And the upcoming deadline and the disruption and the chaos it is likely to cause, or rather guaranteed to cause, is avoidable. Drawing comparison with other countries, right? If you look at the PSD2 regulation in Europe, or even the OSPINET as a regulator in Australia, or MAS in Singapore, all of these are very, not just consultative with the industry, but they handhold the industry and move forward. I think this is where the significant differentiation lies between what's happening in India and rest of the world. If we, when the e-mandate regulation came out, it was, we had seen a couple of solutions which were in the market. And there were banks which said that we will onboard only one solution and not the other, right? So basically, the merchants and the rest of the ecosystem is being forced to onboard onto both the solutions, which are not standard, by the way. Similar thing is happening on the tokenized subscriptions as well. So I think while the job of the regulator is to bring out the regulation, I think it is not wrong for them to handhold and say that this is a regulation, and I'm going to help standardize the solution through a consultative process and bring about, or reduce the disruption which is possibly going to happen. So one is, bring in standardization that will help. Second is when you're bringing a consultative process and laying out the rules on how a transaction should be processed, how a tokenized transaction should be processed, rather than, letting the industry to figure it out themselves. You're being good in the eyes of the public as well, right? To be blunt. So when the the tokenization extension was done, and on the December 21st, I think last year, it was mentioned in the regulation that any workflows have to be figured out by the industry themselves. And with a 6-month deadline, the industry has to talk among themselves and come out with solutions, implement. It's not really feasible. To date, guest checkout, which is PAN-based transactions, are not going to be feasible as on 30th June. So essentially, any card which is not tokenized, and if the customer has to enter the card details every single time, that transaction is simply not going to happen. But instead, if the regulator was like, okay, folks, this is a regulation. Let's spend 3 months in talking what solutions are there, and let's agree on a solution so the whole industry implements the same solution together, then we are less likely to see the disruption which we are going to see now. Because most of the time goes into identifying what solution is better. And believe it or not, some of the ecosystem players would try to get an edge over the others And the merchants end up saying that, okay, now one of the players is not working, the others is working, now I have to change my whole stack and integrate with them rather than doing both of them together. On the other hand, grievance redressal also needs to be more empathetic with the customer. I think simple example is if you're using your cards, there is, even though it's difficult in India, but there is an easy way, there is a way of chargeback to the merchant saying that this transaction is fraudulent, I'm not liable for this. The same thing is not available with UPI. Even if it is available, it is something which is not everyone aware. So the way the payments are made easier, why not make the grievance redressal also make it easier by saying that, okay, here's my transaction history, I don't agree with this transaction, click and post it for a chargeback or post it for dispute. So that system needs to happen and it needs to take priority. As we were talking about convenience versus security, having a secure transaction and a dispute resolution in a convenient way is also important to the speed at which the digital ecosystem is growing in India.
Thanks, Vishal. Okay, so I think I am given to understand that we need to wrap up soon. So I don't think we'll have time for audience questions. I'm also not sure if there are any. Are there any questions that we can take up? But sure. Okay, great. So I think I already have asked a few questions from the panelists. So I understood what you're saying. You said that what I wanted to ask Aparajita, if you could.
Last question, but you said that I'll come back to you later.
The same question which I was asking you, if you could talk about that, the self-regulatory organization.
Okay, sure. Very, very quickly. I'll give you an example of the payment intermediation industry, right? In 2009, the RBI came up with the payment intermediary guidelines. It told payment intermediaries that go work with a nodal bank, let them do the collecting, pooling, settlement. You don't touch the funds. You just give them instructions, provide the tech layer, and because you're not touching funds, you don't need a license from me directly. You can write off the license basically of the nodal bank. It took the RBI 11 years to then see the industry flourish, see BillDesk, PayU, Razorpay, all of these sort of payment intermediaries, then payment aggregators now build sustainable business models where they were able to offer CC, DC, net banking, every single payment option to merchants who could then offer it to their consumers onwards. The regulation is already there. To add on to that regulation is a self-regulatory model where small glitches in the ecosystem which don't need law hard-coded by the regulator can be self-corrected by the SROs. So I wouldn't envisage a SRO to be in exclusion of regulation. It would be in addition to regulation, where you see an ecosystem, a financial tech ecosystem, a payments ecosystem, in which the industry itself is keeping the 2% in check so that the regulator is not building regulation to keep those 2% in check and make the other 98% comply with high friction regulations.
Thanks, Aparajita. I think that's a very important point of SRO being in addition to the regulation and not out of it.
Actually, my question is, it is not a question, it is view. How do you four people see tokenization? Is it going in the direction of DLT or blockchain? Earlier, I have been into one of the summit of TRI. They were saying that blockchain is not useful, TRI meeting. So DLT is not useful. But right now, the language being learned is for DLT adaptable. Tokenization system and words and vocabulary, our mechanism system is learning, which is adaptable by DLT or blockchain. So is this car moving towards RBI 3.0, like 1.0, 2.0, and now 3.0, as what you see, 4 different dimensions in same platform? So ये गाड़ी कौन सी तरफ जा रही है? Is it going about DLT and blockchain? Because as well said by Vishal sir, disruption is going to happen 110%. And deadlines, this government always give very short deadlines irrespective of which segment it is. Either it is income tax filing, either it is compliances. तो वो लगता है कि हाँ teacher वहाँ पे बैठा है ऐसा. So this is view actually where it is going, because nobody can 100% say that ये गाड़ी कहाँ जा रही है.
We understood it.
Yeah.
Shailesh, do you want to take that?
Sure. maybe just spend a minute on tokenization, right? In the way that chip cards secured the information on your card, on your plastic card, tokenization is a different way to secure information that you provide to a merchant that you do e-commerce with, right? Anything that makes the ecosystem more secure is a good move forward. There are use cases that the RBI has approved, card and file tokenization, device tokenization. They both lead to a good place. One leads to the ability for you to use your phone and tap it at a location or your watch or whatever connected device. The other allows you to have a payment instruction sitting with your merchant with the confidence that you can securely keep on coming back and using it every week, every day, whatever your frequency is. But in principle, those are fantastic things to happen. I think the questions that have been asked are as much around implementation, around timing, are all the parts of the ecosystem moving together? And admittedly, that's where the coordination is required. And I think a lot of the pain points that have been talked about are not terminal in nature in any way. These are bumps along the road. We have to navigate them. And hopefully we will get that with cooperation from both the regulator as well as the industry.
Thanks, Shailesh. I think for me, the word of the day has been what Vishal said, empathetic. Empathy for consumers is something which is very, very important when we talk about this road towards more seamless and secure digital payments. But I think before we go, Ambika, because she has joined virtually, Ambika, do you have any last words to share?
I think you said something very powerful. Empathy for consumer is first for each one of us in this room. And I think we should not look at the system of saying, hey, we are okay accepting disruption in the ecosystem. The consumer should not suffer like this. It's a non-negotiable for everyone.
Thank you, Ambika. Do we have...
किसी को और सवाल पूछना है? Any other question? Anybody? Okay, that girl.
Hi, thank you for taking this question. So I just wanted to hear, because we have a lot of diverse stakeholders present on this panel, what are your thoughts about the zero MDR policy and how it's affecting the unit economics of payments businesses? Because on one hand, it's obviously a very well-intentioned policy. You wanted to boost adoption of digital payments and also financial inclusion, but it's also making it very difficult for payment players to sort of invest in building, maintaining, and improving payment systems and infrastructure. So just that.
Sure, that is a fantastic question, I think. And also to add to that, we are seeing some different models, such as Pix in Brazil, which has this more sort of inbuilt mechanism of pricing as against the zero MDR. So is somebody open to taking that question up? Whosoever respond. Vishal, do you want to go first? I think you go. Vishal can go first.
Yeah, I think zero MDR was definitely a very, very good way of boosting the digital economy and digital transactions, and also the way UPI was connected to the bank accounts. If you just think of it, very logically, that if I'm doing an NEFT or an RTGS transaction, I don't really pay a significant amount or any amount at all. So, when I started off in the payments journey, I was always thinking that why should I pay money, or why should the merchant pay money just because it's a bank transfer, irrespective of whether it's through a debit card or anything? And UPI came along the line, so zero MDR was good. Just yesterday, we saw announcement that credit cards can be added to UPI. I think that will make the ground a little even. With credit cards are definitely not zero MDR, so there will be a charge associated with how it will play out is yet to be seen. So it's definitely a step in the direction of not going towards or moving away from zero MDR, but how it will play out, we're yet to see that. But yes, you're right, zero MDR is not sustainable for most of the ecosystem players, and I think the credit card linkage announcement is a step in that direction.
Thanks, Vishal. So I think with that, can I just ask the panelists to provide their sort of closing remarks in one line in terms of future of digital payments for consumer interest, because all of us agree that consumer welfare is the reason we started with and what we are coming to an end with. So with that, we'll, I think, close the panel. Can we just start from here, Prachita?
Sure.
One sentence. Okay. I think a lot has been said about consumer protection, security, and elbow room to innovate. I don't think innovation and security are always at loggerheads. I think there is a way for both to work together. So I think that's the one takeaway.
I'll put it this way, that what is important when we are coming up with new protection measures or new systems, we should not lose the consumers, because we do have these fence sitters. So this transition has to be very, very smooth, well educating, and should not be rushed through. It is very important to test it out and not lose who have already boarded the train for digital payment, not to lose them because of any discomfort. Because Indian mentality is small discomfort and they are out. We don't want that. And we want new ones to get added on with a smooth ride when they are going ahead. So it's very, very important that the time has to be given whenever a new regulation is being put. The deadlines, I will just comment by one sentence, are given to make people not to rush through their system corrections. But internally, everybody knows that it's going to take longer time. So let's be prepared for a longer time, and let's hope the tokenization date get extended so that it's a smooth transition and there is no disruptions.
Thank you. Shailesh?
Thank you. It's a long and winding road to digital inclusion, right? So we have to drive carefully, we have to take the twists and turns, but it's important we keep heading down that direction. We live and we work in India, and sometimes the roads aren't perfect, but it doesn't mean that we don't take that journey.
Understood. Point taken. Sijo?
So on the specific issues, I'm sure that all these forums like these and the key stakeholders collectively will continue to figure out solutions. And as Shailesh said, we'll keep having some bumps along the way. But these collaborations happening are remaining hopeful. From an aspiration or a wish list standpoint, yesterday we had Saurabh Garg from UIDAI coming in saying that we have 100% coverage in Aadhaar right now. Aadhaar is about 10 years old, is what he mentioned. UPI is 5 years old. Another 5 years, if we get to a point of 100% coverage in UPI, I think that's a reality all of us can be insanely proud and excited about, and that will remain my wish list as well.
Thanks, Sijo. And I'm not sure if Ambika is still around, so Vishal gets the last one.
I think learning from e-mandate regulation and tokenization, we should take it in the stride to include merchants in consultation and the regulatory process. And while we are moving at breakneck speed to digitize transactions, we should also address grievances in a very, as easily as making payments. That's how the grievances should be, as easy to dispute a transaction as it is to make a payment.
Thanks, Vishal. So this brings us to the end of this discussion. Thank you very much for your patient listening, and hope you enjoyed the session. Oh, Ambika, you're still around? Do you want to?
Yes, of course I'm still.
No, I think the screen blanked out, so we didn't know that. Yeah.
Just the last thing, I think this journey to a digital India is not a sprint, it's a marathon, right? We need to be patient, but we are not at an age and stage of development of technology or implementation where we think we should let consumers take bumps. Whatever we do, we should try to make things very seamless. It's taken a lot of effort to get consumers to be connected digitally and to pay digitally. We don't want to lose them by introducing friction on the way. So together we need to ensure that we're able to give them the best possible experience. No, we can do it. We just need to have the right attitude and right policy frameworks to do it.
Sure. Thanks, Ambika. So with that right attitude, I think this panel comes to an end. Thank you so much. Yes, yes.
And we all now can proceed for tea. That's all for this day.
या कुंदेन्तु शुहार धवला या शुभ्र व्रस्तावृता या वीणा वरदंड मंडित करा या श्वेत पद्मासना या ब्रह्माच्युत शंकर प्रभृतिवीर हे वै सदा वंदिता श्यामां पातु सरस्वती भगवती निःशेष जाड्यां पहा। माता सरस्वती का ध्यान करते हुए मैं वीणा वादन का ये सम्मेलन शुरुआत करना चाहूँगी सितार वादन का। तो आप अगर माइक में कुछ बोलना चाहते हैं तो आपसे। So let's start the evening. I wish you all a wonderful evening. Thank you so much. Jai Hind. If you want to introduce something about you or
Good evening, Namaskar and Pranam. It's such a great honor for us that we are going to perform before you Indian classical instruments sitar and flute jugal bandi. So, and tabla also. So we have very renowned flute player Kiran Kumar and Mahavir ji on tabla and myself Uma Shankar. So today evening we will play a very melodious evening composition. In Indian classical music we say the evening raga that is called Rag Bihag. It's a evening raga, it's a evening melody. So we start from this raga and after that short while we'll do the semi-classical composition that will be in Dadra. Dadra basically we show like the flavor of different Indian states, like when we start from the Pahari means the Himachal, Jammu, and we come back on the Bihar, UP. So we combine the two compositions. From one is Pahari and the second is Dadra from the UP. Folk, it's a folk tune. So hope you will enjoy. Thank you. Thank you so much. Now the second session, 5 minutes, one dadra, and Pahari Dhun. Actually, this is folk of India, so you can realize. The feel of mountain. let's do something creative. So we will ask question from Sitar, and you have to give the answer from clap, right? Thank you very much. Hope you enjoy. I think actually we play classical. Actually we haven't time now, so that's why next time sure I will. Any song, even talk also. Thank you very much. Hope you enjoy. Thank you very much. Thank you.
Done? Thank you so much, Umaji and team, for this divine healing by a fantastic performance. And music connects people, music connects souls. So you have proved this. And thank you so much for reminding me my hometown. This is the brilliant performance. Kindly join us for the dinner and cocktail.